think that's another era. I don't know. I don't know if they're going to be here.
All right, Julie, looking forward to all of your coverage. It's going to be absolutely mind-blowing. Thanks so much. Coming up on Morning Brief, we bring you today's top trending tickers as we count down to what we know. Oh, now this guy's going that way. Now I'm getting the lay of the land.
LA's can be a big test for a young homeowner turning into their parents.
There's an overflow lot somewhere in the vicinity. Is that right?
Garage is full. They go to the auxiliary.
He said if my garage is full, they go to the overflow.
I heard him. I was right here. Let's just stand quiet. I bet you guys have driven some great cars, huh?
Progressive can't protect you from becoming your parents, but we can protect your home and auto when you bundle with
I
us.
think they might have brought the wrong car. We had the convertible.
When shopping for personal loans, dating such rates can be deceiving. CROS.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas, the structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane.
And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vitus and connect with me on LinkedIn or Instagram for more.
CROS.
All right, welcome back to Opening Bell. We're getting you ready for the trading day. Kevin Mon is with us, President and Chief Investment Officer at Henny & Walsh Asset Management. And it was interesting because I heard this phrase from Ben Edmonds talking about the AI worm. I don't even know if he meant it this way, but he was talking, really how we've seen it go through software, right? Yep. That sold off. And then we heard about the taxes and the financials sold off. And, AI is great and then not so great.
Right.
So, how do you interpret what's going on in the world of AI and investing in AI?
Yeah, it strikes me, Nicole, that investors continue to poke at this perceived AI bubble, and they haven't been able to burst it just yet. The most recent damage was done to the software sector, as they're questioning the amount of spending that's taking place within the software companies, and if, in fact, they'll ever achieve any ROI on all those investments. I think they will. But it serves as a good lesson to investors as well, because the AI revolution is going to be a very long and winding road filled with many potholes. So how do you play the AI revolution, build a more diversified portfolio, and look to take advantage of where the money is being spent as opposed to who's spending the money? I think that's where the growth opportunity is.
Yeah, and look, we've seen people still coming out over the last 24 hours picking these Max 7 names.
Yep.
A lot of questions I've gotten recently. What's going on with Microsoft? The high was way back in August. It's really been a tough time. The stock is down, 20% in 6 months plus. Is Microsoft still a great name?
Don't count on Microsoft just yet. I know they made tremendous amounts of CapEx spending in this space. We want to hear ultimately what their plans are. They have the Copilot. They were one of the initial adopters that they are with their strategic partnership with OpenAI. But I still think there's better opportunities beyond those software names. If you consider other benefactors within the AI ecosystem, where all that money is being spent, whether it's the data centers, the cooling solutions, the power solutions, that's really where the growth opportunities are in 2026, in my opinion.
Yeah, understood. Is there a bubble, or we're just still, because that's the question people ask. And you started with that a little bit.
Yes.
A lot of folks still say, no, we're still going.
Yeah, I would contend, if I could use a baseball analogy again, we're just in batting practice of a doubleheader.
Oh.
Now, the batting practice really involves all of the AI infrastructure spending that will allow AI algorithms to ultimately, we believe, transform society and the economy. But that won't take place till the games start, and that could be years down the road. So investors are going to have to be patient there. But if they're looking for the growth opportunities, look into the AI infrastructure play where batting practice is taking place.
So how much patience
Really
You
do.
know,
Yeah,
because
it's a
it's
great
so
question.
funny. I thought about the cannabis folks. You know, they waited forever. I think about the small cap folks.
Yeah.
They waited 10 years to see the great time here. What about the AI investors? I mean, do they need to be patient?
On the software and the hardware side, yes. On the infrastructure and the power side, no. And I'm going to give you some examples of companies who are benefiting now and whose stock has materially appreciated. How about a company like Comfort Systems, ticker symbol FIX?
Yeah.
They're actually involved in HVAC, supplying the cooling solutions that these data centers need. Boy, is their stock taken off. And then I think about some of the power solutions that are necessary. You look to a company, a big old boring utility company, Nicole, like Duke Energy. Basic dividend, one of the biggest distributors of natural gas in the country, but they also own and operate 6 different nuclear sites in North and South Carolina. Interesting. That's part of the AI revolution too. So there are other ways to play this AI revolution if you look to where the money is being spent.
So really, infrastructure and power is where you can probably find better returns in the near term.
I believe.
And how do you quantify that? Is near term 6 months? Is near term 10%?
I would say near term was last year and this year. And if Jensen Long is correct, and there's going to be between 3 and 4 trillion with the T spent on the AI infrastructure by the end of this decade, well, maybe we've got 3 more years of this type of spending that these types of companies will benefit from.
Yeah, I see a few others. You have Taiwan Semi, MCOR, NewScale. Those were some that you didn't mention just yet. Where do they fit in your picture?
Sure. So MCOR, a lot of people don't know MCOR. They were actually added to the S&P 500 last year. They're a construction company, so they're involved in the site planning and the construction of all these data centers. NewScale Power, well, nuclear seems to be the path forward for us right now as it relates to power in addition to natural gas. NewScale, though, supplies small modular reactors that allow data centers to get the nuclear power they need off-grid. And Taiwan Semiconductor, I've been on your show many times talking about Taiwan Semiconductor, the largest dedicated chip foundry in the world, nearly a 60% market share. And they're now helping NVIDIA onshore the production of their chips on U.S. soil out in Phoenix, Arizona. I think Taiwan Semiconductor has a lot of upside potential.
We were looking at the hyperscalers and how much they were spending. You were looking for a return on investment, ROI, and Taiwan Semi was really the one that meaningfully came out very early, talked about over 500 billion in spending. It was a huge number, and meaningfully changed people's worries from AI bubble to wow, this is great. And that was probably about 4 to 6 weeks, or maybe 4 weeks ago or so. So what did you think about that? Because this stock is incredible. It went from 134 to 379, 1 year, up 80%. What kind of upside potential do you think Taiwan Semi has?
You look at Ford P, they're still trading around 27, 28 times forward earnings. That's not too rich. I know it's rich from historical
You would buy it here even at the high.
I would buy it here, absolutely, because they can't keep up with the insatiable demand that's out there for them to manufacture chips. Remember, they don't design chips. NVIDIA is a chip designer. They manufacture the chips. So there's a little less volatility there. And the fact that they've now partnered with NVIDIA to onshore the production of their chips in the U.S. signals to me that other companies are going to look to do something similar and likely Taiwan Semiconductor will benefit.
Good morning. Good morning.
Everybody has in some way, shape, or form, maybe in an index or just straight out. They bought it on a sell-off.
All right, Tesla's up a bit this morning.
Ecosystem never bet against Jensen Long. What I'm most intrigued by is 2 quarters ago, 88% of their revenues came not from chips, but from data centers. So they've now diversified their revenue stream beyond chips. That's very smart because they're really trying to build AI in a box for corporations to tap into. And I think the growth is going to be significant for NVIDIA and Ford. Hard to believe considering how much they've grown already, but they're not stopping here.
Bullish on tech. Bullish on tech.
Bullish on certain tech and industrials.
All right, Kevin Mond, President and Chief Investment Officer at Hennigan and Walsh Asset Management. Thank you. Great to see you.
All right, Tesla continues. It looks good. Got 7 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is February the 12th, Thursday. I'll be with you here until the closing bell, giving you the play-by-play. First 15 minutes, I'm not doing much of anything except taking profits off the table. if I'm up over 50% or more on short-term swing trades. Looking for stocks with high relative volume for day trades. Price above VWAP. VWAP rising for bullish trades, down and to the right. VWAP dropping for bearish trades. Let's see what Brent had to say. I didn't get to read this because I was running this morning. Okay, futures were up. They did fade from the highs. Support 6,900, resistance 6,960, and then 7,000. So we got a pretty tight range. Flipping to risk off if we were to drop below 6,900 for some reason or another. Below 6,900, you can see that's negative gamma. The lines are dropping down. You can see down towards 6,700. So positive gamma, we're above the zero line, if you will, above 6,900 and 7,000. Okay.
Welcome back to Opening Bell. We're getting you ready to count down to the start of trading here on Wall Street. You can feel the energy. Will we have a winning week on tech finally? The first time in 5 weeks. Sam Bonus is with me, taking a look at some of the big stories here on Wall Street. Good morning, Sam. Good morning to you. Yes, we are looking at certainly tech having a better week this week, Nicole, and thanks to some of those nice set of names, obviously NVIDIA, a lot of the chip stocks as well. We have got the futures pointing higher right now. Obviously, we've had some more data, jobs update this morning with those initial jobless claims, 227K, just slightly higher than what the market was expecting. There are the highest since early January, so something to think of this morning. We throw it
S&P unchanged. Nomura this morning, but the average S&P stock saw an absolute move of 10%. Okay, dispersions are getting kind of high here.
We're looking at levels of 416 there, very much on the benchmark. Crypto is higher, so catching a bid this morning, but still struggling, not able to capture that 70K there on Bitcoin. The metals are lower. That came off the back of yesterday and that rethink around the future path for rate cuts now. Interesting moves in the dollar this morning. We are off a bit right now. We're at 96.72 on the Dixie. We've actually seen some euro and sterling strength coming through this morning. Look at dollar yen, 153. That's obviously something to pay attention to. We saw a nice rally across some of these Asian stocks overnight. We saw records in places like Japan.
All right, we got 3 minutes to go.
Singapore, the Kospi. A lot of this has been thanks to some of the market bellwethers, your TSMCs, your Samsungs of the world. A lot of attention on the HBM4. In fact, we will be watching Micron today because that CFO.
Been thinking about buying some out of the money puts out in near November. Like maybe some 20 deltas, something like that. Just for a hedge in case the markets does see some weakness in the future. Those puts will be cheap. VIX is pretty low. Probably do a put vertical or something like that. Could do a collar similar to JP Morgan, or just buy that collar. Anyway, all right, so that looks okay. Let's look at Trace for now. We got 2 minutes to go. Okay, less than, we got 30 seconds. Okay, we are open. New York Fangs are mixed at the moment. Tesla dropped back down like it did yesterday. Microsoft moving lower at the moment. Tesla, a little pullback. High tick alert. All right, Robinhood pulling back a little bit this morning. Robinhood. Okay, Tesla's on the move. There goes Tesla. Tesla moving.
Threatening to get back into gear a little bit here. It's up another 1.8% at the open. It's now like 193. I think if it goes up another, let's say 3%, you get into the high 190s, and all of a sudden the chart starts to look better. People start to maybe assume that it could start to do more than its share to carry things. So I think it's something like that has to happen to really get us a big push above 7,000 and to disprove the idea that the market is just kind of stuck here and it's all a matter of just rotation and not upward momentum.
CapEx only goes one way, up, 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 up. You've got reports now, I mentioned in the FT about Microsoft sort of separating even more from OpenAI in terms of strategy, which might mean a need to buy even more NVIDIA chips over time, or even have control over more compute. Unclear, obviously, they already buy plenty with Azure. So, no reason to question that thesis, it would seem.
No, I mean, it really is.
Being the ultimate beneficiary, yes, there's competition from Alphabet with its TPUs, for Amazon with Trainium, and any number of others that want to get into inference and those chips. But they're still dominant.
Okay, Tesla moving. Tesla looking good. Let's take a look at the Tesla 60-minute chart.
I mean, the stock has swung around in this range quite a bit. It's all about kind of what happens maybe after next year, I guess.
Tesla 60-minute. Okay, Tesla 60-minute.
CapEx announcements that have come out. There's no reason to question that. It's much more about, how does this develop in the years ahead? Are we going to basically have this taper to some degree? And then, it sounds silly, but in 3 or 4 months, everyone's going to be using 2027 numbers to value the stock, and they're going to be higher, and they have all this free cash flow that they have at their disposal. So I do think that all fits together. But again, the stock hasn't cooperated, and it's just kind of been sideways for a while.
Interesting to note that Alphabet, a darling, of course, throughout last year, is down about 6+% just over the last week.
Yeah.
Nothing you can point to specifically. There are those who say, well, where's their free cash flow going to be? It's not going to be much of it given the $185 billion or so in CapEx the company is going to be spending. Some of it on NVIDIA, but remember they have their own chips that they design with But Mike, I did note that because that has obviously been a recipient of so many of the pain in other areas, even those companies it competes against, with the incredible performance it had last year.
Yeah, I think that's the main part. The only thing that's happened the last week is they said they're going to spend that much more than we had thought before. So I think that's just getting into the price. Also, this idea that some of the spending seems kind of defensive, or people they have to do it because everyone else is doing it. But I think mostly it's just kind of rotational. Some of the winners getting sold. I mean, I would point out, just to get away from the
Tesla looking good.
big banks. I mean, they've made new highs in a long time. JP Morgan, Goldman Sachs, mid to high first week of January. Bank of America, Morgan Stanley, going back to December. Now, again, they had great runs. People love the regional banks. The regional banks are kind of taking up the baton. But it is still, I think we don't have to look too far just to sort of find some areas that we thought were going to be leaders that have been sort of on pause for a little while.
Yeah, Goldman, the outlier in terms of performance, stronger after its earnings in particular, still up about 9.5% so far this year. But to Mike's point, JP Morgan actually down 3%. Guys,
All right, Tesla's on the move here.
Down 15%.
60-minute looks good.
10% now. About 130 billion or so market cap company, but can be one of those names where again the earnings were better than anticipated. The guidance was strong. See headlines about downplaying the results. I happen to know the CEO. He talks a lot about AI in terms of the benefits it's going to have for their business, what they're going to be able to do in terms of efficiencies inside AppLovin. Yet there it is, and when you do see that kind of reaction, Mike, I don't know what that tells other investors about how they should be thinking about again software broadly. You made the point earlier; it's not quite the same as some of the names we've been talking about so frequently, whether it be a Workday or an Adobe or a CRM or a ServiceNow.
Right. I just feel like it's got this massive market cap. It was always in that basket of retail favorites. By the way, the retail favorite stocks have had a tough run. For as much as we keep lionizing retail traders for buying the dip, the stocks that they're most concentrated in have actually had a lot of give back. Obviously can be any number of things. Unity Software also had results and a disappointing result. That they play in the same world as AppLovin. They're much smaller. But I do think that's just the tone right now, and it's a little bit of a high bar to satisfy investors at this point.
All right, Robinhood moving a bit lower this morning. Robinhood.
Next, we can do the big asset management deal. If you guys want, just to get into the deal mode here, this is Schroders. This is a name in the UK. It's a very big story, as you might imagine, in that market. Nuveen is the asset management arm of TIAA.
Teachers Insurance and Annuity Association. I believe.
Thank you. Yes, that is correct. Private company, obviously, all cash deal. And you can see paying a significant premium. In fact, about 17 times earnings per share for Schroders. Compares to around 12 times that Janus went out at recently. So a significant premium to what we saw for the last deal. There's the consideration.
Tesla looking good. Tesla. Tesla's on the move.
Outside the U.S. or not domestic stocks. Nuveen is almost all inside. So it really diversifies, creates a $2.5 trillion asset manager. It's a large deal. Wells Fargo advising on this as well, I should point out. But one I wanted to point out, and again, significant premium. Family that started Schroders is a seller here.
Really?
They are keeping a lot.
What generation is that of the family?
We're talking hundreds.
Yeah, I was going to say.
Yeah. I don't know the generation.
Yeah,
but
it's been around a very long time.
Very long time. But will no longer be a public company in the UK. Now going to be owned by Nuveen, which is owned by TIAA.
Interesting.
Yeah.
The UK asset management industry would seem to be relatively concentrated. So you buy in one of the older players, you got a pretty solid hold there. We know that that's where some of the biggest buyers of the Alphabet 100-year debt was in sterling.
Which continues to get ink today.
I think it's
what's up with the century bond fascination?
Tesla's on the move.
It's unusual. I think there's an intuitive what could
Futures. Just watching the futures. Hedge flows are flat.
As I said before, it just sort of solves some of the math, asset liability matching stuff for pension funds. And
some of the desk notes do say you got to give them credit for sussing out true demand, at least in Switzerland and the UK.
No doubt about it. These are definitely some of the most sophisticated issuers, Apple mostly, but they're going to go out. They have good timing and they know how to optimize their cost of capital. And the other thing about fixed income managers is, if a new big issuer shows up, just the diversification benefits are great. Because if they get flows, they gotta buy something. And so it's like either we buy more of the bank debt that's there every single day on the shelf,
or we have a new issuer that we want to use, to sort of.
Yeah, we're going to talk to Johnny Fine of Goldman later this morning about maybe that deal specifically, but certainly the overall issuance.
Overall, I mean, just this week alone, or the last, let's call it 10 days, we've seen Oracle and Alphabet hit the corporate bond market for big numbers. And spreads, as you know, are very, very tight right now.
Spreads are super tight in private credit. People are still nervous about, and I think those are related. I think people have a confidence in the public corporates. Plus, yield levels being higher than they've been in recent years, I think, is keeping spreads tighter as well. It's just the nominal yield being 5-6% is attractive just on its own merit.
Yeah. Mike, while we're in the neighborhood, 10-year kind of has lost 4-2 and had trouble getting back above today.
It's just been, I mean, it's honestly been.
All right, Robinhood, I took it off. Robinhood.
Kind of resumed an uptrend. 430 seems to have been a barrier recently. I mean, yesterday's data did maybe change the Fed outlook a little bit, but it doesn't even seem to be moving on it. Treasury keeps like buying back little swaths of longer term debt. They bought $2 billion of like TIPS and things like that. So there's a signaling effect of like we're going to do whatever we can to sort of lean on the long end.
Yeah, that and I think a lot of the second-day looks at the jobs print.
Yes.
Look at where we would have been without healthcare. Right. Probably a 7K decline.
Exactly.
I mean, the journal headline is the job market is essentially a healthcare market at this point.
That combined with the downward revisions for benchmark revisions, it just sort of kind of minimal job growth, and minimal job growth needed to keep the unemployment rate where it is. You actually have prime age labor force participation basically at a 25-year high.
Yeah.
So it's not like you got that many more people you're going to be drawing in. So I do think that is correct. It didn't really read as hawkish, I think, in the second level.
Guys, we mentioned margins being under pressure in part because of memory prices. Dell is getting hit on this. HPE, not unexpectedly, both down. Less than Cisco, which is down as much as 7+% right now. And as you saw during one of the boards we showed when we were heading to break, memory names are up. I would point out not just MU, but SanDisk again. I mean, what a trade this has been. SNDK.
Tesla's still going.
Right before we open, let me take a look now. Yeah, up almost 10%, adding to incredible gains, of course. Wow.
I got to do the math again.
Held it through the year, Mike, but wow.
Well, I have to do the math again on if Western Digital had not spun it out.
All right, Tesla on the move, looking good. 60-minute. Okay, you move your stop underneath today's low.
Not really our thing. And if you combine the Western Digital and SanDisk market caps now, it's just kind of eye-watering relative to what it was before.
Right. A lot of the desk notes in the past 48 hours, let's say this kind of echoing what Intel said last week, and that is that this is not going to solve itself, this shortage, this year.
Right. So, I mean, they start talking about new capacity, and it's like 2 years down the road, and it's sort of, and I don't know how bullish that is, right? I mean, it's like you got to buy it at any price. I think it obviously creates frictional costs throughout the rest of the system, but maybe it's a small enough piece of the total, cost of anything that they're building that you just absorb it.
Mike mentioned FedEx, and we did get an update today, 29, where they are guiding annual revenue higher as they kind of prioritize some of their higher margin businesses. Raj Subramanian was on our air earlier today, talked about
Futures not moving much. Watching hedge flows, expecting prices to stay below 7,000. Tesla's still going here. Tesla.
Combination of those two things I've never seen in my career. So it's from a FedEx perspective, 70% of our business is in the United States. The U.S. consumer is the strongest economic force on the planet, so we are extremely well positioned.
Nvidia, a little bit of a dip. New York Fangs are mixed at the moment.
things that kind of, whether it's Home Depot or something else that AI can't necessarily replace entirely.
I mean, look at, first of all, FedEx has had an incredible move, and it's been even a recent acceleration, and it's been helping to drive.
New York Fangs still look weak.
I mean, I know they're kind of, they're benefiting from some aspects of reduced capacity in the freight cycle coming back. But, I look at things like Old Dominion Freight. They're trading up at 30 times earnings. Clearly, everyone thinks.
All right, what is VIX doing? What is VIX doing?
So, but yeah, stuff around the world, all of a sudden seems like it's safe, or it's a safe way to assume that you're not going to, get this.
VIX.
A little skeptical as to whether, in fact, we can stay on this for a while. One thing about a growth-driven market, where it's all about tech and AI, it's like you can make the case that these businesses deserve higher valuations because of their special attributes, because of their profitability, because of the innovation, because of their disruptors. When you're a value-driven market, you would think the people who own value stocks are valuation sensitive, and there is some kind of a ceiling on what you're going to pay. And if you look back at when value really has trounced growth, if it's not coming out of a recession, it's like when the Nasdaq imploded in 2000, and value stocks were vastly underowned and underappreciated.
Robinhood's still moving lower, testing yesterday's low. If it bounces here, I might put that spread back on. I don't like the way it's acting right now.
Permit me for a moment to just focus on Warner Brothers because, of course, keeping a close eye on the board here and when they're going to respond to that latest change, enhancement, if you will, of Paramount's offer, in which they did cure a lot of the concerns that the Warner Brothers board has raised previously about the nature of their offer. They've done a good amount of things here without actually raising the overall consideration price, but put it, at least they feel, in the Paramount side, in a apples-to-apples comparison with Netflix, in the sense of saying we're $30 all cash.
Hedge flow is still pushing a bit lower.
Focusing on this debt adjustment mechanism at global networks, in which their argument would be you're not going to be able to sustain $17 billion in debt with the spun-off entity. Therefore, you're going to have to lower the debt at that entity, and of course, every dollar of debt that comes out of that impacts the overall value of the Netflix bid. What is the Warner Brothers Discovery Board going to do? I don't know. What will they say? But this certainly would seem to put pressure on them. Something I would point out.
Okay, Robinhood still moving lower. Robinhood.
Where the board does feel like, well, in this case, I do think Netflix may actually represent a reason for us to, at the very least, talk to Paramount. Netflix perhaps would come up with something to address the debt adjustment mechanism. I don't know. There has been talk about, well, you do a contingent value right that guarantee holders of global networks $3 a share. Again, this is just thinking on the part of people who are observing this. But while it may not be today or tomorrow that we hear, certainly in the near term we are going to, and I didn't want to forget that. I would point out Netflix shares continue to decline. Down another 2.6%. That stock there. By the way, those who may have listened to Elon Musk's latest presentation, this was XA.
All right, Tesla coming back now.
Yesterday, I think it was. He talked about long-form video, fully AI created in all ways, so 15 to 20 minutes being something they might be able to get to by the end of the year. Do wonder if that was true, and of course we all know Mr. Musk is known for making predictions about things that perhaps are going to be farther out than he says they will. Nonetheless, what that'll mean for the world of video.
Okay, Intel getting a little pop here. Intel.
I mean, I don't know. It's clearly they're the type of businesses that have been under pressure.
Faded a little bit from the high. Intel pop and fade. Tesla, similar pop and fade at the moment. Bitcoin, probably going to take a while for this to turn back up. All right, let's see what's working here. SCHD, SPHD, SPHD, HCHD, these ETFs. All right, SPHD, SCHD. All right, SCHD. These broke out in January. These are up about 21 days. Still going. These dividend paying ETFs. SDIV, DIV, PGX. Okay, Robinhood testing yesterday's low. Need to see a bounce on that one. All right, everything got whacked just now. Looks like a sell program. Mm-hmm. All these dividend paying ETFs. Every single one of them are up.
They're not the biggest market caps, but interesting story in footwear today as Crocs and Birkenstock go in different directions. Crocs blew the door off. 229 beats 191. Shares there near the highest since August of last year. Birkenstock was in line, and those shares not that far off of some 2.5-year lows. Meantime, Dow's up 232 to start this Thursday. Don't go anywhere.
CWBX. NBIS. PLYX may resume in less than a minute. NBIL.
All right, all of these dividend paying ETFs are higher. Tesla pulled back. All right, Tesla. Okay, a little fade so far, Tesla. Tesla. Pretty much everything is lower at the moment. Futures. Futures are still up 12 on the day, but off the best levels of the session this morning, pre-market. All right, so futures were high was about 69.90. Okay, what's Oklo doing? Oklo still got work to do. Higher low, looking for this to push higher. So right out of the gate, we got some selling. Looks like sell programs.
That's an indication. I think you look at things like the Google 100-year bond, the potential and the warning that maybe AWS is getting spun off.
as an indication that the capex spend that these Mag 7 names have been just indulging in, if you want to think about it that way, has perhaps some legs to it. I mean, Google spending on that spend being out there.
All right, futures are starting to bounce now.
Years or so in terms of the time limit on that long bond. So I think that suggests the strength of the sector. I think we're other.
Let's see what Core 1M looks like. Core 1M.
First or second inning of the AI spend and AI build out in terms of energy. I think
Core 1M gapping down, but still in there near 1050. Core 1M. This is just telling you calls are expensive when this gets below 8. All right, let's look at junk bonds. Junk bonds. Junk bonds bouncing.
All right, I was looking at Crocs. Did you see Crocs up 19%? It's also the FedEx Investor Day. FedEx right now.
Okay, junk bonds look pretty good for the most part. That's a good signal if it continues to move higher, junk bonds. All right, so we're seeing some short covering now. Bitcoin bouncing.
All right, great to see you both, Ben Watson, Kevin Hanks. Thank you, and thank you, friends, for being with me live here on Schwab Network every day. This is Opening Bell. I'm Nicole Petalides every day at 9 a.m. and 2 p.m. So I'll see you at 2 o'clock for the watch list. Join me then. In the meantime, keep it right here. Our coverage continues. Morning Trade Live with Sam Bottas.
Okay, Tesla pulling back.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features.
All right, so junk bonds look a little better. All right, we need to see this start to move higher. Junk bonds. Let's look at the New York Stock Exchange, NYA. At highs, New York Stock Exchange higher. So it's the New York FANGs.
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
New York Stock Exchange is higher. Junk is fine.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered.
Okay, let's look at breath. Breath.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action.
S&P breath is actually improving. Tick cumulative is rising.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Moms,
when my grandparents moved here? Did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing up houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help give my family a happy financial future.
Okay, it's just tech. Tech and small caps down a bit, but mid caps and big caps, those look okay.
Hello, everybody. Welcome to Morning Trade Live. I'm Sam Barnes, live from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour. So here is a look at what is coming up on today's show. We'll take a closer look at the international
All right, breadth is actually improving as we fade a bit. New York FANG components are lower.
Here with some of these indices this morning. We've actually had the Nasdaq turning lower as we've seen a little bit of a drag coming from technology stocks. We have, of course, got the Russell 2000 just on the line to the downside at the moment. So a little bit mixed at the moment, a bit quiet as far as the headline is concerned. The S&P 500 there just to the upside right now. But Dow Jones is taking the lead here, up almost 0.5% right now, 53.43 there. So as I said, a bit mixed off the back of some more jobs data. A bit of an update on that. We'll be going
S&P, we're in the middle of yesterday's price action.
We've got a really busy earnings week out in Europe. We've got the DAX up 1.5% right now. The FTSE 100 just on the line to the downside. We did have the Nikkei 225 actually hitting another record overnight before pairing some of those gains, ending the day flat. And the Hang Seng Index down 0.9%. So a bit mixed of a performance across our foreign equity markets as well today. Let's just check in with these futures products off the back of course, what we got with respect to the initial jobless claims. There we go. Just a little bit of time to warm up there. Needed its caffeine hit this morning. Our futures products board. Okay, the 10-year yield at 4.15 hasn't budged a huge amount off the back of that, although it just ticked us slightly lower there. We were at about 4.16 ahead of the jobs data this morning. The US dollar index is pulling back a little bit there. We're at 96.71 there. We have indeed seen some euro and sterling strength coming through this morning. Look at dollar yen though, 153. So that's an interesting story. Gold pulling back a bit as well, taking a bit of a breather, obviously tracking the losses we saw yesterday off the back of some of the rate cutting expectations being priced out of these markets now. Crude oil is at $63 a barrel, down 1%, and Bitcoin catching a little bit of a bid here, but still can't get up to that 70,000 mark, as we can see here at 67,000 and change. So there's the scorecard as we say.
We're starting to show signs of a bounce potentially. S&P.
Good morning, Sam. Yeah, we actually did see a pretty decent drop when it comes to the trajectory of these new home sales data points that are actually coming out, existing home sales, my apologies. The number came in at 3.91 million. That's for the month of January. Street was looking for 4.16 million.
S&P.
Obviously, we did get a revision to the downside down to 4.27 million. It's the lowest drop that we've seen since 2024, I believe October of 2024. So a little bit of a move to the downside.
Equal weight.
At the trajectory, but we also have to be mindful the previous month's print was actually an outsized move to the upside, so a little bit of a rebalancing. And then also we did see interest rates kind of move to the upside, hitting that 4.3% level in the 10-year. That also kind of pushed mortgage demand to the downside here. And then you are seeing once again a month-on-month change of around 8%.
All right, the equal weight indexes are higher. Junk is higher, so that's telling you what it is. Okay, equal weight looks fine.
Yeah, certainly. I mean, look, this has been a tough time, certainly for the housing market. I mean, particularly with respect to the affordability issues. I saw some stats out this morning that 55% of people feel like they don't earn enough money. 50% think mortgage rates are basically too high, and also 43% lack of lower cost of homes is seemingly the issue here as well. So let's keep an eye on that. But we also got initial jobless claims this morning. So another
RSP.
market, 227K on the headline, the highest since early January. Just talk us through.
So the tech's getting sold at the moment.
Particularly off the back of what we did yesterday.
Junk looks fine. If junk was below the 50-day, I'd be more concerned. It just looks like it's consolidating right now. Probably not a whole lot of investors jumping into the junk bonds at the moment. Junk. What's IWM doing? IWM looking for a bounce. S&P. Got a gap. Yesterday we filled the gap and moved a little bit below. We filled the gap, moved below, and then came back up. Still consolidating for a third day. I would guess it's going to be similar to yesterday. I don't see us breaking above 7,000, so I'd be just taking less risk. Maybe put some money into some of these dividend-paying ETFs. They're all higher today. Again.
Okay, switching from the macro to the micro, obviously we've got a lot of earnings that we've been passing over this week, and interesting moves in these markets this morning. Some of these companies which have had solid reports still getting punished, no doubt. We've seen that in the software space, but you're looking across some of the staples this morning. You and I were breaking down Mickey D's. It looks like value's working for them. Some of the Grinch Happy Meals, return to the Monopoly, which was very nostalgic. Look, just talk us through what you're seeing as far as the reaction. I know you're also looking at QSR this morning as well off the back of their report.
Yeah, you are seeing kind of trading flat at this point. So the report was actually really good. They beat both on the top bottom line and actually exceeded the street's expectations when it comes to U.S. comp sales, and they almost doubled the street's expectations.
S&P not doing anything. There's no trend here. It's choppy. If you're going to do anything, look at the dividend ETFs that I posted. Okay, Micron. Trying to push higher. Gapped up this morning. Micron. EXC breaking out.
Setting maybe some investors up for a little bit of angst, if you will, because of the margin of the profitability pressures.
Okay, so we are seeing Mickey D's moving to the upside off the back of that. Don't know how I feel still about dill pickle Grinch salt for the fries, but that's usually the part that people take out of the burgers. But anyway, moving on, KG, U.S.-China ties. Obviously, a lot of headlines around this morning.
Okay, so T-Mobile, that was down recently, right? Mercado Libre coming up. That's, I guess, the South American equivalent of Amazon. Mercado Libre, American Electric Power, AEP breaking out. T-Mobile. Marriott Corp. Marriott.
Well, everything's negotiable these days, and I think that's exactly what you were seeing. And this is actually very interesting because of this detente that we have seen between
Day 3.
It kind of does align with Trump's visit. President Trump usually does not go and visit a country and then actually slap on additional tariffs.
Robinhood moving lower again. Robinhood.
Both sides want to see a win here. You are seeing some enthusiasm, especially in the agricultural space. So catching a bit off of this. Maybe China
so there's some optimism there. I'm not sure so much into the tech side, how much that's going to be a boost for tech stocks here in the United States. But other parts of the market, there is maybe a little bit more enthusiasm. Not only when we're looking at agricultural, but also when you're looking
Still diddling with the lows right here. The S&P looks like it almost. I think it just filled the gap. It got pretty close. Pretty close. Gap fill.
continuation of at least one more year of this current state of the trade deal or trade framework, if you will, between the U.S. and China.
Okay, and just speaking of soybeans and of the like, I know you're looking across the agriculture business.
MACD is lower.
Moo ETF, just talk us through what you're seeing there because it's been having a pretty good run of late, moving in the right direction, I suppose you could say.
Yes, it is. What's actually very interesting about this industry and the Moo ETF, this has obviously a lot of agricultural stocks, not only the bigger names, but also if you're looking at some of the smaller names and the chemical names that have been catching a bit, Dow Chemical, ConAgra Brands also doing a fairly decent job, ADM catching a decent bit. This is a sector or an industry that has very low beta, so it's not really susceptible to what's happening in the broader equity market as a whole, and this is why we are still seeing buyers stepping in. It doesn't take that much to push these agricultural stocks higher, very low floats for a lot of them, and very low exposure for a lot of institutional investors that are now finding this as a potential safe haven. So let's see how this actually does react when it gets to around the $87, $88 level. If it's able to break above that, you could actually look at 105 as the next major area of resistance. But this industry has been oversold for a very long time. It seems like investors are now trying to find some value here. And on the back of that China news, this could actually be a tailwind for a lot of these stocks fundamentally.
All right, we'll be watching. Hey, thanks, KG, for getting us across all of that, the movers and some of the data for us today. I'll check in with you a bit later. Coming up, we will dive into what to watch in global equity markets. Memory stocks have outperformed early here in 2026, but what else is worth watching internationally? We'll discuss that and more when we return here on Morning Trade Line.
Okay, markets are trying to hold right here.
Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now.
Okay, looking for a bounce.
No politics, no spin, just the market.
Looking for a bounce.
Close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back here on Morning Trade Live. Shares of Cisco were under pressure this morning despite beating expectations in its most recent quarter. Investors are unimpressed with its outlook. The company earned $1.04 per share on more than $15.3 billion in revenue, with revenue up 10% from a year ago. Looking ahead, Cisco's guidance is basically in line with forecasts, which disappointed investors hoping for a stronger boost from the AI boom. We know that memory costs and some of the margin pressures are a bit of an concern here as well. Down 10% right now on this name at $77 and change. But of course, it has had a big run up in recent years. Don't forget, this is an older technology stock. All right, here's your winners on the section. We've got Seagate once again higher this morning, up almost 11%. The memory stocks have been having a pretty good run in recent days. We've had, of course, a nice session out in Asia with some of those South Korean names, so we're seeing some follow through. Motorola is higher by 11.2%. Equinix up at 12%, and Zebra Technologies is up 19% or so. So we've got some nice double-digit gains for our S&P 500 leaders this morning. Let's take a look at the laggards, and AppLovin is declining 16% right now off the back of what was a pretty strong report. It just feels like it's getting dragged down with some of these AI disruption fears right now, despite a pretty solid quarter there. We've got Baxter International down 14.5%, CH Robinson down 10.5%. All right, moving on. Joining us now is Indrani Day, who's the head of global investment research, FTSE Russell, who's joining me around the desk this morning. Thank you so much, Indrani, for your time.
Thanks, Sam, for having me.
Look, the market's like round numbers, and this year in 2026 alone, we've worn an S&P 500 7,000 cap, we've worn a Dow 50K cap. But let's switch our attention to what's been happening overseas, because the FTSE 10K, Kospi 5K, Nikkei overnight 58K. What is going on out there?
So I always like to say 2025 was a reset year where the momentum shifted and a new pattern came into play. And 2026 is a continuation of the 2025 pattern, but on steroids, as I like to say.
Yes,
it's
very
almost
much.
like the rest of the world, the global ex-United States is far ahead. That's because the drivers of the equity rally globally have really widened. You have the widening of the AI rally, more players kind of benefiting from it. You have the steeper yield curve and financials doing well. You have materials, both on the industrial because of the green transition, precious metal. So multiple drivers because of which many parts of the global ex-US are really doing well. Month to month, the pattern can shift a little bit, but the broad trends continue. And the two areas that I really want to concentrate where I think there is a huge story developing with more to come is South Korea and Japan. South Korea, because it has been a clear outperformer over 2025, and even in 2026, year to date, it's about 25-26% up.
Yeah.
Huge amount. South Korea has strong tailwinds continuing, and Japan is a very interesting story for a long time in the making, and it has a potential both for upside and also as a source.
Okay, we are starting to bounce a bit. Hedge flows turning up. Apple, Microsoft showing a little bit of short covering. Tesla, same short covering. Tesla starting to see a little short covering, a little bounce. Okay, so it should be pretty obvious to you that what's going on is tech is being sold. We get these bounces. Tesla turning back up. Okay, I'm watching Robinhood. I might put this put credit back on.
Dividend payouts. Now, these kind of things, for the same earnings growth, you can have another leg up because of the valuation re-rating. So that's what I like to say for South Korea. You have the earnings growth story, part of the AI momentum story. Valuation still reasonable and can go up simply because of all the reforms that are happening to increase shareholder value.
Yeah, so improving fundamentals is the story. Obviously, on the weaker dollar as well, that's been helping offering a tailwind. But as you say, relatively cheap valuations compared to their US peers. But you've talked about how the
RSP.
decisive leadership, but that is not necessarily a bad thing. There's just a lot going on. Correct.
Okay, RSP is trending. As you can see, we had a couple of dips at the end of January into February, but we'll continue to trend. SCHD, these are trending as well. Chevron higher. A little dip this morning.
later part of the year, you saw a lot of money going into emerging markets. In recent months, you have a lot of funds flowing into South Korea and Japan. And Japan is a really interesting story for two ends. I mean, obviously, Japan had a huge rally because of the Takaichi raid and what's expected. But if you look at Japan in a slightly longer term basis, Prime Minister Takaichi is a believer in the Abenomics. And Abenomics started in 2013. Because of those reforms, Japan's ROE has almost doubled in the last 10 years.
Microsoft bouncing.
Percentage points to high 10 percentage points. And there are more reforms.
Shorts covering. MSFT.
That's already showing up. They have huge amount of cash and Takaichi's fiscal reforms, the more spending they have a huge amount of
Sluggish market today. Let's see. Up, down volume. Yeah, up, down volume is mixed.
Which EM is likely to benefit from. Can you talk to us about what you're seeing there?
Yeah, so it's kind of interesting. EM as a bucket, they have so many multiple drivers. Obviously, you have China and Taiwan from the AI story. I must say for FTSE Russell, Korea is a developed country, so I'm not going to touch upon that. So emerging markets.
That also makes it very confusing as to that designation. Yeah.
So China and Taiwan, these are the kind of AI plays. Then you have a whole lot of emerging markets that are very strong in commodities, LATAM for that matter. Yeah. You have a whole lot of countries that have gone through corporate governance. If you see the World Bank corporate governance scores, EMs have really, kind of gone up the ladder, so to say. So their fundamentals are in place. They are exposed to many industries, technology, financial, commodities, both industrial commodities and the precious metal gold mining thing. So it's a very diversified set of mix. And because their governance has gone in and there's a fundamental re-rating of emerging markets going up, their valuations for the same earnings has really gone up. And again, 2025, we saw the shift where emerging markets broadly outperform developed markets. Yeah. And that story continues in 2026.
Indrani, fascinating chat. I wish we had all day, but we have to wrap it up there. Thank you so much for your insights this morning. Come back and do it again soon. That is Indrani Day, there, head of global investment research at FTSE Russell. All right, well, coming up, we will get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
HYMC.
Yeah, Frano, this is really easy. I don't know why it's so complicated. All right, so we're looking at Robinhood, right? So we're looking for Robinhood to bounce. Okay. We're looking for Robinhood to bounce. Okay, so if we sell something, all right, so this is 70 right here. So I'm just going to put this line right here. Okay, so I'm going to sell a put. And because I don't want the unlimited risk, I then buy a call. I buy a put.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Let's welcome in the team from Charles Schwab. We are joined by Lizanne Saunders, Chief Investment Strategist, Schwab Center for Financial Research, and Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, which I'm very happy to say is sitting beside me here. So let's just kick things off with Coop. Obviously we've had this initial jobless claim coming this morning. The 10-year didn't budge a whole lot, but obviously it's been a really interesting
really interesting past couple of weeks. I mean, yesterday was a jobs Wednesday. We normally have a jobs Friday, so a little bit of a unique environment that we're trying to navigate through here. But I think what's interesting in the fixed income markets lately, Sam, is that volatility has been very low lately. If you look at the move index in the fixed income market's kind of akin to the VIX index in the equity markets, and that's at very historically low levels. So I think that that's not too surprising, though. So given that we've seen a lot of the pricing of are there going to be more rate cuts, less Fed rate cuts, we'll see where CPI comes in tomorrow. Potentially that shifts the narrative of how many rate cuts we get. But ultimately, given the kind of factors that are happening at play right now, I don't think it's too surprising that we have seen volatility in the fixed income market be relatively low. We're seeing a lot of concerns over what's happening in the geopolitics, but even as navigating through that, really what matters to fixed income investors is what's the outlook for the economy, what's the outlook for inflation, and both of those continue to relatively hold steady.
Yeah, I mean, look, it was a strong jobs number yesterday, even with the revisions last year. So I suppose that's the bright spot. But then just getting to you, obviously you and I speak about your 3 C's very often with create, catalyze, cultivate. But I see now you're thinking about another C word. I'll let our viewers get their mind out the gutter. Cascade when it comes to some of the volatility.
All right, still waiting for the markets to continue. False start, basically.
When I came up with just a little bit of a framework there, just for fun, the last C was cultivate. So going from the create phase of the AI and the hyperscalers to the catalyze phase, which was about data center build out and expanding the power grid, and then cultivate, I wanted to see about capturing the beneficiaries, how it's infiltrating into the broader economy. But there's been so much focus on the disruption side of things that I thought Cascade was a better descriptor. And we're in that sort of parallel universe right now where we are now seeing attention devoted to who are the beneficiaries, how is it manifesting itself in terms of what labor cost needs are we getting meat on the bones in terms of the productivity piece of it, but then of course the disrupted and the disruptors, and that has worked its way obviously into the SaaS meltdown story more recently. Our industry. So I think it's part of the reason why we just have these rapid fire rotations. News comes out, there's a quick narrative change, and it's a sell first, do the actual research later.
SPY.
And unfortunately, I think.
Okay, Tesla bouncing a bit. I'm not crazy about the way the market started off today. Similar to what we saw yesterday. S&P 500, similar in that we gapped up, faded the entire move. We're in the upper half of the range. So that's good, but beginning to feel a bit like distribution. I have no way of knowing exactly what's going on here. All I can see is the price action. Okay, we're staying in this really tight range for the past 4 days. So people are getting frustrated and doing things they shouldn't do when the markets aren't giving them a direction. Okay, we're in this tight little range.
I think that it's another catalyst that just pushes potential Fed rate cuts in the question mark game. So we do still expect that there's going to be 1 to 2 rate cuts this year. The timing yesterday, given the stronger than expected jobs report, was pushed back into July. So I don't think that that's too surprising or out of the norm right now.
Okay, and Lizanne, just getting your thoughts on all of this data that we've got and looking ahead to that inflation print as well. I mean, interesting moves in the markets yesterday, initially sort of celebrating what was a stronger jobs report there before retreating. What are your expectations as to...
You people are just speculating. You're not helping. You're not telling us anything we don't already know. Okay. Tell me something I don't know. Vinny is so critical. Yeah, I know.
Let alone 70,000, that level. Interesting action. Thanks so much, Jared. Well, the House of Representatives has voted to cancel President Trump's Canada tariffs, and 6 House Republicans joining their Democratic colleagues in voting on this measure. Our Washington correspondent Ben Worshville is here with more on this. So pretty extraordinary here to have this vote, especially given the Republican participation in it, Ben.
Absolutely, yeah. This is a significant rebuke to President Trump's tariffs, and kind of the first time we've seen Congress stand up not only on this issue but on a wide range of issues that we've seen. It is a symbolic vote, I will underline that, but it's clearly gotten under President Trump's skin, and we're expecting a lot of follow-ups on this on varied fronts. Now that kind of Congress has freed itself up to kind of go after President Trump's tariffs directly. On this Canada resolution specifically, the next step would be the Senate. The Senate has actually already passed a similar resolution to critique President Trump's Canada tariffs specifically. So the expectation is that there will be a vote there at some point, which then sends it to the president's desk. That, of course, is where it likely ends because the president maintains the veto power, and the votes this week have shown a majority supporting these resolutions, but not a two-thirds majority that would be needed to override any of President Trump's vetoes. So
Talk about big tech companies unveiling plans in recent days to fund the AI build-out. Alphabet's launching tech's first 100-year bond since 1997. Well, Oracle says it's planning to raise up to $50
Okay, I'm not doing anything else until I see a trend. I don't think we're going to break above 7,000. We're just very choppy here.
How's the market absorbing all of these financing needs?
Well, the short answer is incredibly well. The Oracle financing priced last Monday, the debt component of it, that was a $25 billion debt financing that had the largest order book in our market in history. Clearly digested very well. I think the market viewed Oracle as having drawn a line in the sand with respect to its balance sheet and how it expects to fund for the remainder of the year. When we flip the clock forward to this week, we saw incredibly robust demand for Alphabet, both in the dollar market on Monday and then also in the sterling market on Tuesday, where they issued the largest sterling deal that had ever been done in the capital markets. And they issued a very large Swiss franc denominated bond deal as well. Also the largest non-domestic Swiss deal that was ever done in the market. It's been quite a run, and it's been like a real pleasure and an honor to represent these companies.
Who's buying all this debt?
Oh, it's an incredibly broad array of institutional investors around the world. I think on the Oracle deal, there was close to 3,000 line items in terms of investor participation. Obviously, the international markets don't have the same breadth or size as the US, but these are very robust, very broadly distributed securities to largely an institutional investor base.
Does the market draw a line in terms of who can do this, or how much, or what the balance sheet looks like?
All of these capital markets are open to the full range of investment grade borrowers. Obviously, when we think about some of the more specialty niches that some of these borrowers to execute in, 100-year sterling is a market where there's a pretty narrow Venn diagram of issuers that investors are willing to buy and issuers who are willing to issue in that long a tenor. Obviously, Alphabet and many other long-standing, large-cap, very well-rated companies will continue to have access to that market. I'm not convinced there's going to be an enormous splurge of 100-year activity, but we've seen over time a lot of activity in 100-year dollars. This is the first, as mentioned, tech deal in 100-year sterling. I think it's a lot of fun. It's a super interesting market, and obviously a little niche, but getting $1 billion sterling done in 100 years was quite a transaction.
The capital needs of some of these companies are seemingly endless. Many of them generate, or at least used to generate, a lot of free cash flow. Not as much anymore, if that at all. But I just wonder, given what a good time it would seem to be to borrow, do you encourage them to get back into the market sooner than they otherwise would?
Well, they'll plan over the course of the year, as anyone would, and they'll look at various different levers that they have to be able to fund this CapEx. You're right. These CapEx announcements continue to grow, and they continue to change and be revised upwards. Just in the last 2 weeks of earnings announcements, we saw CapEx announcement go up versus previous estimates by between $120 and $150 billion. Some will rethink about how they're allocating capital, whether it be reducing M&A or reducing share repurchase. Others will have plenty free cash flow. Others still will find a need to be able to go to the debt capital markets, and they'll look to do that in a way where they can support their credit ratings and existing leverage. And so, of course, credit conditions right now are very affable. They're affable in the US. We're close to the 1997 lows in terms of credit spreads. That's also true in the international capital markets as well. Right. It's clearly a great environment, although I'm not expecting a
huge amount of disruption to credit costs as we think about evolving over the course of this year.
And nobody seems concerned. I mean, these are obviously incredibly profitable companies, many of them we're talking about, but they are going to negative free cash flow. I mean, it's something I think few of us would have anticipated seeing, certainly in 2026. I would concern in the bond market about that.
No, because the expectation, it's really a short-term build of an extraordinary amount of infrastructure. It's obviously clearly the largest infrastructure build in human history. And there will be some companies who will go into deficit in the short term as they pay for that build, with the payoff in subsequent years, whether that 2, 3, 5 years forward, looks to really pay down that leverage and get into a much more robust free cash flow position.
Meantime, overall, you remain quite dovish on rates in general. Yes?
Yes.
The 10-year maybe goes into the threes?
Yeah, I still think that we can see 3.5% in the 10-year later on in the year. I think it's a combination of two factors. One, I agree with what David Hyman was saying yesterday. I think there'll be 4 cuts over the course of this year. They'll be back-end loaded. My view is that the first cut will be in June. That's obviously not in line with Jan Hatzius and his team. I'm more dovish than they are. And that's simply because I think that with Walsh coming in as Fed chair, I believe that the Fed will move to a more anticipatory stance when it comes to making monetary policy decisions. And I think it's clear as day that the disruption to the labor force, and we talked about this last time I was on with you, the disruption to the labor force will be significant. It might not be spot, although we're seeing evidence of that, but it'll certainly be in the future. And I think the Fed will want to get ahead of that. They'll want to be the chief risk officer of the U.S. economy. And to me, that means they're going to be cutting rates more proactively. I don't think anyone's really too worried about inflation. I think they'll be cutting rates more proactively. So I think June, September, October, December, I think we'll see 4 cuts over the course.
You think they move any 50 basis point increments?
No, I don't think so, because I don't think we're going to see the labor market really crater. And I think you'd have to see a real shock to the economy to see a 50 basis point move. But I think the front end move we'll see play out. I think the growth dynamics that we'll continue to see as economic growth and labor markets continue their decoupling, I think that will reduce term premium in the long end of the curve, which is around about 80 basis points in 10 years. So 50 basis points more cuts in the front end than the market is anticipating. And I think the term premium could moderate to something closer to 50 basis points, which to me gets me to a 10-year yield closer to 3.5%.
I think the equity market would like everything they just heard from you. Thank you, Johnny.
Pleasure.
Appreciate it. Johnny Fine from Goldman Sachs.
Thank you for having me.
We'll get a lot more on the credit picture when we're joined by Bruce Richards from Marathon in a bit. He's been sounding the alarm on software really since last year. First, though, some new numbers sending Cisco shares sliding, pacing on their worst day in almost a year. We'll talk about some of the memory price concerns that are driving that when we come right back.
KOLD, QPTZ, PLTZ. RIME halted to the upside.
All right.
With us here, Dan.
Sorry, I don't mean to be fixated on this. Tesla pulling back again.
And I have to tell people off air, I was like, why are you here, Dan? What are you going to talk? What's your thinking around crypto, the intersection of crypto and technology? What you want to let people know today when you speak at the conference?
To me, it's really about the disruptive technology themes that we're seeing. And I think when you look what's happening with AI, I mean, I think a big thing is around like authentication, robotics, human proof. That's something, especially as it goes into things like blockchain, I think that's extremely important. So I think blockchain is huge. When you look at utility, it's going to be a huge part about crypto. But the sell-off, it speaks to the sell-off in crypto, just like we're seeing this massive Armageddon-like sell-off in tech, specifically in software. It's created white knuckles in this market.
I mean, I've talked to some investors who have said this is sort of like an attention-seeking market or a short attention span market. And one of the reasons we've seen risk off is that people are like, oh, what's the next new shiny thing? In some cases, it's been the literal shiny thing, meaning gold, and people have gone, it's that. But people are sort of bopping around more than they used to. I don't know if you're seeing that.
I think there's some of that, and then obviously when you've talked about a lot, I think there's just hypersensitivity about disruptive technology. and what that's doing to install base vendor. I mean, obviously, if you look at Salesforce, ServiceNow, Oracle, Microsoft sell-offs. Look, in my career, going back to the 80s, I've never seen anything like it. A structural sell-off like this.
When it comes to AI, the story doesn't end at chips and software. We're going to talk
Okay, that was Dan Ives. Let me listen to Dan Ives here. Okay, I'll be right back.
I feel more emboldened about the bull thesis on tech and AI this year, despite obviously this massive pullback.
And even in software.
Look, I think this software sell-off will go down as a generational opportunity to own some of the stars. Because they're going to be a core part of the use cases. The view that a Salesforce, a ServiceNow is going to get disintermediated. I'm not saying on the edges, it's a headwind. We talked about it.
Right.
But you're talking about hundreds of thousands of enterprise customers. They're not going with just a tool that is ultimately launched into the market relative to what install-based players are playing with.
Well, let me ask you this, because you and I were just talking as well about a piece in the Atlantic today by Josh Triangle, who looked at the potential for AI to replace jobs. And his thesis is sort of the differentiator is speed, right? That you're correct if this thing, the AI juggernaut, companies roll it out slowly. Companies tend to move slowly historically. But there is a case to be made that they could move faster because even now the AI is coding itself, for example, right? I think that some of the latest models, they used the past models to code the new models. So if AI is coding itself and can in effect like make its own infrastructure, then more quickly, wouldn't that then be a risk, a more real risk to the software companies?
Yeah, but look, there are around the edges, there are risks, and there are going to be software companies that are disintermediated, especially like one-trick ponies and some of the pure plays. But when I look at software, I truly believe a lot of it is really autonomy. I mean, you haven't seen the monetization. A lot of the software companies are building out their stacks. A lot of companies are still in the build out the infrastructure, the database, the data center phase. I think when it comes to software is going to play a huge role in the build out. And I think when you look at the install base players, the Salesforce, ServiceNow, the Workday, some of the others, it's something where I think the market is mispricing what I believe is actually going to be a huge talent. I could argue a lot of these software companies with ServiceNow is going to be exponentially bigger than it is today. And also, I'd say also comes down to CEOs. Just like you don't bet against Godfather of AI Jensen, betting against McDermott, it's been the wrong move. That's also my view relative to what we're going to see in tech.
What's the difference between those who are going to win and those who are not?
I think it's install base, it's moats, it's ones that are aggressive on building the suites. Like if you look at CrowdStrike, I think has been an innovator relative to what George built, and from a stack perspective on AI. I think when the Cash is doing on Palo Alto with CyberArk, well, look, if they don't do CyberArk, then that maybe would have made them vulnerable, but they did CyberArk. So I think you're going to see a lot of acquisitions. You're going to see a lot of offensive moves in terms of being aggressive. But the ones that are on the treadmill at 2.5 speed, they'll be disintermediated. And I think.
But what does a moat even look like right now? Like, what are there any real moats when the AI can code new software and new apps and new whatever for you at the drop of a hat?
I think now on the edges, that's obviously competitive. But the reality is, the moats are these companies they're basically the hearts and lungs of operations, from Salesforce to Oracle to Microsoft. You go across software infrastructure, they're not just going to get ripped apart relative to a tool that comes and is viewed as going to disrupt the sector. That's why I just view like the software sell-off. We will look back just like a DeepSeek moment. Software sell-off is a DeepSeek moment that means we sit here 6-12 months now and be like, that was a golden mine.
I want to ask you something sort of related, back on the crypto side, and this is something that's been topical within the crypto world, and that's quantum. And the possibility that once we see quantum computing develop more, that it could be used to crack crypto algorithms and cause thefts in that world. I mean, I know you know, I don't know how steeped you are in quantum at this point, but what do you think?
Look, I think it's speculative in terms of like what that's going to do. Like some will say, is that a reason that like Bitcoin sold off the way it has? Like everyone's trying to find a reason. I mean, my view like on quantum, like quantum's going to be like a huge opportunity as a growth area. We talk about the pure play names that ultimately feed into that. And also, I think a lot of that is like you could spend your whole life being like, okay, what's going to happen when it comes? And a lot of times, as me and you've seen, you know, in our whatever 50 years combined, you know, in this industry, don't say it. But the reality is that a lot of those things become far worse in right. Quantum, I view much more as a growth catalyst, an opportunity, and some sort of dystopian threat.
Dan, before I let you go, I have to acknowledge that there was a Barron's piece about you that talked about sort of the many hats that you wear and sort of explored whether those hats are in opposition to each other. And I just wanted to give you a chance to respond to that because I think it was, you know, you're a very familiar face on financial shows and in the press. I wanted to give you a chance to.
All right, Tesla's a little bit low. Sorry, Tesla's a bit lower at the moment.
Being bullish on AI, bullish on tech, as well as other opportunities, which I'm very open about. If I chew gum, Whitebush needs to approve it. Okay, if I wear a hat, so the point.
You may approve this hat. I don't know.
This hat, yeah, maybe that's it. But the reality is, it's something where for me, I'm always looking at opportunities, but it's never for me. It's like I'm at the core a tech guy. I'm bullish. And people want to like hate me for it for being bullish, but that's always been who I am inside and outside. And it's led to other opportunities. Now, look, I'll continue to evaluate like new opportunities and existing ones that make sense. But that's something where, you know, I get it. It's something where when you break the mold, it definitely, you know, others are going to notice. But, you know, to me, it's like, I am who I am.
That is, I can endorse that.
And I like the pink. I
appreciate it. I'm not sure I can pull off the hat, but thanks a lot, Dan. Appreciate it. Coming up next, we'll be back here, of course, at Bitcoin Investor Week. We're going to talk to Scott Melker, the wolf of all streets. That's next.
If you feel like you're on the wrong road with your finances, Credit Karma can help you push through to a better place. Because that's how you gain the power to reach your horizons. Wherever they may take you. Find your way to money with personalized guidance to improve your credit, savings, taxes, and more. Intuit Credit Karma, proud partner of Team USA. What a hotel, right? And only $250 a night for my favorite site. What? You didn't check Trivago? You got mine for $155. You have to check Trivago. Oh yeah, prove it. On Trivago, you can compare from multiple different sites. Look, same hotel, $100 less. I didn't check Trivago. Check Trivago. Save up to 40%.
Tesla being a dog today, making people question their thesis. S&P is still fading a bit. Okay, looking at the S&P, we're still inside of this box. Testing yesterday's low again.
I'm outnumbered by tiny terrorists 3-1. That's our 10th rebuild of this castle. And I literally have to do my planes on a bed of Legos. But I got goals. So Lego planes it is.
RIME vaulted down.
don't always go to plan. Sometimes you have to try again. When it eventually clicks, nothing tastes sweeter than victory. Candy Crush Soccer. Download for free today.
Get a 3% match on your crypto or cash deposits. Paid in USDG. Hold it, trade it, stack more. Join and make your deposit.
JZXN. UBIX. LTZ.
You're watching Market Catalyst. I'm Julie Hyman here at Bitcoin Investor Week, and I'm joined now by Scott Melker. He is host of a podcast called The Wolf of All Streets and well-known voice in the crypto world. Scott, thanks for being here.
Thank you so much for having me.
So I feel like you're somebody who is sort of tapped into the retail investor around this. That's your audience, largely. And while we've been seeing the sell-off, like, what are those folks doing? What are you hearing from them as this has been going on?
I think it's very clear from even looking at the crypto fear and greed index, which is sitting at 5, historically low, that people are very fearful, and sentiment is in the dumpster right now. But to be quite honest, I think that most of those people washed out at higher prices or in previous cycles, and that retail has not been participating in the way that many anticipated they would be in this cycle. I think that the narrative has really been institutionally driven. It's been the digital asset treasury companies and the ETFs and the adoption by wirehouses. And I think retail largely either utilized their dry powder at higher prices or bought it years ago and have somewhat forgotten about it. But by almost any metric you can look at, retail just isn't really that involved in buying these products right now.
What would change that, do you think?
It's very easy. Higher prices. I know it sounds like a joke, but I always say it, that the best advertising for Bitcoin or any asset, to be fair, is higher prices. You see Bitcoin.
All right, kind of a sucky day today.
All of the narratives, the same story.
Tesla.
The bearish tilt goes up $20,000 the next week. I can't believe that news. It was incredible. It's so bullish. We're going to $1 million. So it really just takes a small, I think, infusion of liquidity or some small catalyst. There's nothing on my radar really news-wise that I think is going to do it. I think a lot of people were looking to the Clarity Act being approved. Obviously, we had the Genius Act before. To me, those are the kind of things that now are priced in and aren't really sparks for retail. I think those are the kind of events that you look back when the market is looking more bullish and you say, wow, we should have been paying a lot more attention. That was a huge catalyst. Everything has changed. But I don't think they're going to move the price at this moment. But once again, if Bitcoin just even has a bit of a rise, and maybe at $95,000, I think interest will be completely different.
I mean, Scott, I gotta ask you then. This speaks to, like, what are the central conundrums of Bitcoin? Like, I talked to these people here today who are like Bitcoin maximalists, who have all these lofty ideals about Bitcoin is the future of currency and assets, and I'm going to hold it and give it to my grandkids, and maybe you have the same view. But, like, is it also just something people buy because they think it's a lottery ticket, and at some point it's going to make them rich?
Of course, I think it's nuanced. So there's a huge bifurcation in, I think, the Bitcoin holder community. As you said, there's still the adamant crypto whale early investors who bought it for libertarian values and to exit the system. Actually, I think a lot of those people have become disillusioned and were the ones who probably caused the sell-off. Some of those early billionaires' net worth increased so much, they saw Donald Trump talking about it and cheering for BlackRock and JP Morgan, and they said, this isn't what I signed up for, and they left. So I think there's less of those people actually than there were before. But to be honest, even if you're one of those people, and that's the reason you got into it, there's no way you get to global reserve asset without going through Wall Street and institutions and the government. So I think it's an inevitable part of the path, even if you're the most ardent believer in what Bitcoin can be and the current financial system.
Okay, so we're drifting lower. Looks like we're headed down to the 50-day again.
90+% of people who are going to want to buy this are going to view it as any other asset in their portfolio. And why do people buy stocks, really? Right? They buy it because one day they believe the value will be higher and they'll be able to benefit from that. Maybe they buy it because they're frustrated that their dollars aren't earning money. And
S&P, we got a little bit of support here, positive gamma.
Well, it's interesting what you're saying too, because some of the argument has been, oh, once it gets institutionalized, once it goes through Wall Street, you won't see the same volatility. You might not see the same 4-year cycles. But what you're saying is true, and there's less of that sort of philosophical.
S&P 500 fading more.
institutionalized, it becomes another asset portfolio. Some of the
So S&P is pulling back. S&P pulling back.
institutions can now hedge in a way that they couldn't before, and so that part of it, I do think should dampen the volatility. That said, like it's so nascent and so small relative to other assets. Take a look at silver. I mean, Bitcoin was bigger than silver 6 months ago. Or a year
Okay, so we got a gravestone doji off the highs. Okay. SPHD still going.
So I think that it's going to have huge periods of volatility, but generally in between will be very sideways. But that's not actually a strange thing for Bitcoin historically. People look at it as this massively volatile asset, but if you actually take a look at the history of Bitcoin, almost all of the gains on a per year basis are made in 10 days. So it generally chops sideways most of the time in these big ranges and then has these huge explosions to the upside or downside that give it that reputation. But it's really no more volatile now than any of the Mag 7 or even silver and gold.
Just real quick before we go, do you think the bottom's in? Where do you think that level would be?
I think we are bottoming, which hard to say if the bottom is in. I sort of view it as an event. A lot of the signals I would have looked for a bottom technically and fundamentally did happen when we got down to that 60-ish thousand area. We saw massive buying volume the next day that actually eclipsed the sort of selling capitulation the day before. Technical analysts are viewing a few lines on the charts. The weekly 200 MA has always been visited in a bear market. That's at 57,000. So, but you know, smart money might front run that.
Right.
I think we're in a bottoming process, right? We had that kind of big move down. Maybe we go visit it again.
Yeah.
Really scare people by getting a bit below it into the 50s and bouncing. But barring a huge black swan with the greater economy or markets as a whole, I think that we're in the process of seeing that bottom in. But historically, that could mean 200 more days of chop.
We'll see. Scott, thank you so much. Really appreciate it.
Thank you.
And I'll be here at the Bitcoin Investor Week conference for the rest of the day, bringing you more interviews right here on Yahoo Finance.
RIP. So what are you going to do?
It's a tough call, you know. I don't want to bite the ham that feeds me. We'll see.
Ham.
Are you saying ham? Yeah, if I bite the ham can't feed me. If I run out of ham, I'm hungry.
If it's ham.
You guys all knew that?
Yes.
Goldfish have short memories.
S&P still moving lower. 50 days right below. Below 6,900, we get more defensive.
This is next level creatine. UPXY. Sharpen your memory. React quicker. UPIX clearer. Builds tone, define muscle. All from one powerful supplement. TLTZ. Feels stronger than ever. Ancient nutrition creatine plus collagen with electrolytes. Made for women. Backed by results. 3% off good creatine 20 at ancientnutrition.com. TECF.
2 ways to trade with Kraken. Whether you're buying crypto instantly on the go or executing precision strategies on Kraken, Kraken gives you the best of both worlds. No matter your style, Kraken is the perfect platform for you. Fast, simple buys.
S&P down to 6,900. Okay, watching for hedge flows to turn. Okay, Robinhood. Yeah, Robinhood dropping a bit more here. Okay.
UBXY. RIME. BMNZ.
Good morning, I'm Alphine's executive editor Brian Sutton, coming to you straight from our newsroom in New York City. It's a darn busy morning for markets, and for me, I'm declaring today.
Micron up 3%. It's off the high of the day as well. Boeing back up into the range. Back up into yesterday's range. Boeing. Bitcoin moving a bit and then dropping off.
Here's McDonald's CEO Chris Kempczinski said on GLP-1s last night on his earnings call.
We don't get the evidence of it really having a material impact on our business. We know that consumers' behavior changes. We know that in general, they eat fewer calories in a day, but also what they eat, the mix of that changes.
They give you one 590 calories. That's what comes with the Big Mac. Normally I wouldn't care less about an earnings report from computer player Lenovo. Like really, it's Lenovo. The company's CEO said today the memory chip shortage hammering hardware companies like his will persist into year-end. Cisco CEO Chuck Robbins echoed the sentiment on his earnings call last night. And all this is great news for one of the hottest stocks in the entire world. Memory chip player SanDisk stock is looking against pre-market in part because of commentary like I just laid out to you from Cisco and a Lenovo. Let's keep these hot takes coming, friends. My man Kenny Podcat is here. He's chief market strategist at Slate Wealth. Kenny, always good to see you. Before I ask you like 9 questions with software stocks, tell me about this photo. Let's get up on the screen here of you in our kitchen drinking wine and beer. That's the new Trader Talk. Like, it's very like moody, set against a backdrop of darkness. I mean, what do you do?
Listen, I think they did a great job with it because it doesn't even look like I'm sitting in the cafe there, right? It looks like we're out to dinner at a great restaurant, which was perfect. That was a great conversation. It was an initial one with some of these senior guys talking about the first lessons of trading in the industry when they first came into it at 20 years old. It was just published yesterday, so you know you can find it on Yahoo Finance.
Kenny, what was in that glass, man?
MSTZ.
It was delicious red wine in that glass, Mike. It was great. I'm not sure. I can't see the brand. I didn't pick it. You guys picked it actually, but it was great red wine.
Well, if we picked it, I'm sure it was a $500 bottle. Kenny, I want to get to the. Wish I didn't $50 bottle. Whatever it is, it is. Kenny, I want to get to the software stock. You heard my open here. I'm not jazzed up about what's happening in the space. Every day, seemingly, these stocks have completely fallen off a cliff. What say you?
I think it's getting to the point where it is, in fact, overdone. And based on that chart that you showed, retail investors are kind of thinking the same way too, right? They're taking advantage of some of these stocks. Look, we discussed this before. The AI trade is still very much in its infancy. There's lots of anxiety. What's it going to change? What's it going to delete? What it's going to eliminate? But new jobs will be created. We've seen that in every industrial revolution we've had. While it's uncomfortable at the beginning, it is what it is. But ultimately, it all works its way out. Now, this one made me a little bit more anxious because AI is kind of changing how you and I interact during the day, maybe more so than prior to the industrial revolution. But one way or the other, I think you have to stay focused on it. You have to realize kind of where it's going and where it's taking the world, not only the industry. I think stocks in good names that get oversold are where the opportunities are.
Okay, you're a rational guy. Is Workday going out of business?
Who?
Workday.
Yeah, no, I don't think Workday's going out of business at all. Look, for us, Salesforce is a key component of what we do and how we use it and how it keeps everything together. So I don't think Workday Salesforce is going it's going to change. Everything's going to change, but that's part of the process.
RIM.
Right? It's going to have business now.
I was thinking back, Kenny, to those days I used to see you down the New York Stock Exchange floor. On days when we saw these really big moves lower in stocks and markets, would you be out there buying? And I think we can apply that mindset to what we're seeing in software and that chart we just showed on retail investors. So they were just not doing much. They were not doing much. And then really, recently, they've come out there trying to be heroes. And they can see the chart right there, picking a bottom in software stocks. Would you do that? You were a trader. Would you go and do something like that?
Yeah. Okay. So there's two things here, right? I was a trader. I was not on the floor trading for myself. I was representing mutual fund hedge fund pension plan, big asset managers. So to your point, there were some that absolutely would see an opportunity in names that had gotten beaten up, and you would be a buyer. But like everything, there were others that saw nervousness and anxiety, and clearly they were selling because that's what makes the market rise and sell. But on times like this, when stocks were overdone, most of my clients, which were mostly hedge funds, were always the ones kind of in there on, on the buy side for sure. I did not represent retail all institutional, so I can only speak from the institutional point of view. But on the next subject that we're talking about is Workday going out of business or is AI going to destroy the world? Look, I was a perfect example of someone that got run over by technology, right? The job I did no longer exists. There's nobody left out there. It's all automation. But then there's new jobs created, new opportunities. So that's why I said I'm more optimistic about it. I think
Kenny, your aura lives down there at the New York Stock Exchange. Don't undersell yourself. But everything we're seeing with software, shouldn't it make the case? If you hate software, you buy the Mag 7, even though they're investing billions upon billions of dollars in CapEx.
I think 100%. I mean, look at the things we're talking about. NVIDIA. By the way, after TSN's announcement earlier this week or late last week, I forget when it was. NVIDIA, I'm expecting in February of month when NVIDIA reports, I think they're going to report another blowout number. And they're going to talk about what the future looks like. I think it's crazy for people to start bailing on names like NVIDIA or Apple or Amazon. I think it's nuts. So I think when you see an opportunity, I don't say you go out there and just buy it haphazardly. You got to be strategic about it. But when they're under pressure, don't be sold. And the fundamentals for it for them hasn't changed. That's the opportunity. So I do not think we should be throwing them out. Throw the baby out the bathwater.
All right, we're below 6,900, so we're risk off for now. This is the sixth time we've tested the 50-day. Okay, sixth time we've tested the 50-day. In recent 1, 2, 3, 4, 5. This is the sixth time. Okay. S&P 500.
Low tick alert -800.
Okay, so we're starting to get some capitulation here in low ticks. Robinhood is off 8.5%. Wow, I wish I had held on to those puts now. the long puts for earnings. All right. So we didn't think we were going to break above 7,000. So the alternative is to either stay right where we are, chop people up, or pull back. And right now we're pulling back. So we got people selling at the moment, looking for dips to get bought. All right, Bitcoin pulling back as well.
Profit shares, of course, have been hammered this year because of the Bitcoin bearishness. And this is where I find my colleague Julie Hyman stationed at the Bitcoin Investor Week conference in New York City, surrounded by Bitcoin bulls, Julie.
Low ticker at minus
Yeah, I
800.
think that's the natural, and this is their natural habitat size. So I'm sure I'm going to hear some optimism today, even if it's maybe a little bit of a harder time to be optimistic. You know, even if we're talking about tokenization of real world assets, you know, and institutionalization of the assets as well. You know, maybe those institutions are staying engaged, but maybe they're staying engaged.
Risk off.
Or maybe just hanging back and holding and watching to see what happens rather than re-engaging by buying in this market. Standard Chartered just out this morning, by the way, cutting its year-end target to 100,000.
ZLS.
Second time it's cut this in 3 months, and they say we could see 50,000 before that kind of recovery. And that's one thing in a lot of analysis here, that perhaps Bitcoin prices have not seen the bottom, that they'll
Silver.
bounce along here for a while, and then maybe post-summer see some kind of recovery sauce.
Julie, can you ask every single person that you're talking to? I imagine you're talking to like 800 people. Can you ask all 800 people what is the next positive catalyst for crypto?
I'd be happy to, Saj. I mean, and I'm sure some of them are going to say the Clarity Act. When I talked to Andy Baer from CoinDesk recently, he said that, and I kind of had the same reaction you did. And he said, well, the thing is that the market has sort of priced out the chance of clarity happening in the short term. It's the likelihood has fallen so low that if it does happen, it could potentially be an upside surprise. So that was one person I talked to recently, and that was his answer to that question. I don't know what other people are going to say, but here are some of the people I'm going to ask that question. Sal, you ready? Anthony Pompliano, this is effectively his event here, this Bitcoin Investor Week of Podcat Financial, well-known Bitcoin advocate and investor. Lynn Alden, I'll be speaking to in the 10 a.m. hour, as well as Matt Hogan from Bitwise. I'll also talk to Scott Melker, the host of the Wolf of Wall Street's podcast. He's a well-known voice in the industry. He's actually sitting across me right now talking to folks as well. Maybe he's asking them that catalyst question too. By the way, later on today in the afternoon, I'm going to talk to Robbie Mitchnick.
Nice trade, Russell.
Of the biggest Bitcoin ETF. Of course, he's over at BlackRock. He's the global head of the digital asset there. IBIT is that
Low ticker at minus 800.
So you see any gold Bugattis or Lamborghinis parked out front? I know the crypto crowd loves the cars.
I think that's another era. I don't know if they're going to be here.
All right, Julie, looking forward to all of your coverage. It's going to be absolutely mind-blowing. Thanks so much. Coming up on Morning Brief, we bring you today's top 30 tickers as we count down the opening bell.
All right, so the market's giving clear risk-off signals for now. Okay.
IREZ.
Low tick alert minus 800.
Risk off at the moment, folks. Risk off at the moment.
You've already played the next level.
Do you play games on your phone?
Yes, when I have some time.
Yeah, almost every day. What if I told you there's an app called Tester Up where people get paid to play games?
Just a few levels and I get money.
Oh, it works. I'm down.
I'm impressed.
Play on Tester Up now.
When you use Moomoo, you turn data into sharper trading decisions. Follow power players' trades and model their portfolios in just one click. And with Moomoo AI, spot what matters, predict what's next, and decide with confidence. It's everything you need on one platform, from stocks and ETFs to options and crypto. Join now for exclusive new user rewards on us. Trade smart with Moomoo. Just today.
And now you find me in the studio. As I've been saying all morning long, it's a busy day for markets, and it's been a busy day for yours truly. I caught up with AB Index earlier today. It's a 5 1/4 in outlook feature served up to investors. There was a lot to like in this company's earnings report. Sales rose 2.5%. Earnings increased by 7.5%.
All right, SPY.
And 2026 operating profit pinned at 4% to 8% growth. That is solid potential growth for a business like AB InBev, selling commoditized products in beer. I didn't like that volume in the fourth quarter fell 1.5%, but I think the market expects that from beer players at this point. Consumers are choosing healthier lifestyles, and in some cases, beer is a luxury for a low-income consumer battling affordability. There are 3 catalysts I do see for this company. One, sporting events, such as the FIFA World Cup is this year. Michelle tells me the company typically sees a volume lift from a big sporting event like this.
Risk off.
The company is seeing strong demand for its Corona beer at the Winter Olympics in Italy. I found it interesting since it's cold and maybe it's not normal you have a beer.
Kimberly Clark. That was a observation yesterday. KMB. Kimberly Clark from yesterday.
I mean, who doesn't love seeing an iconic bald eagle flying off the back of an iconic Budweiser Clydesdale horse? If you don't love it, there's something wrong with it. All right, McDonald's out with some plump U.S. sales despite the rise of GLP-1 weight loss drugs. Credit goes to returning McDonald's menu options. Y'all find it Singapore. Brooke Thomas comes to McDonald's CFO being board in it. But quarter in and out.
Value really played a key component of the fourth quarter results. Break down how value played a part and also how it brought back in low-income consumers who were pulling back a bit in 2025.
Yeah, sure. Well, I think firstly I just started with, I think the kind of key, what was key to the quarter? I think there were probably 3 things. One is that you saw that we had holistic strength across.
Kimberly Clark looking good.
We had guest count growth globally and within our U.S. business. And we talked about the fact that we've made, I think, significant progress on our value and affordability platforms and how those are resonating with consumers. And, you know, it's a challenging environment out there for the industry. And what was really important to us in the quarter was kind of delivering on what we call going 3 for 3, which is great value and affordability, exciting food news for our consumers, and combining that with really powerful marketing or brand activation. We got all those 3 things to come together in the quarter. I think the strength of our results speak for themselves.
And some of what we saw the results of was the impact of those extra value meals. Now that was a 50% discount on combo meals, but the company's support for franchisees
Low tick alert minus 800.
one, to expect franchisees to
BMNZ,
extra value meals.
SDIT,
And was that 15%
BTCZ,
discount enough to get
RKLZ,
consumers back in the door?
QPTZ, SMST.
Extra value meals that we reintroduced in September in our U.S. business really speak to how we're listening to consumers and remaining agile. Because I think it was consumers that said, "You guys are doing a great job with your value platform, but we're still looking for more value and affordability across your core menu." And we put the extra value meals back in place, and we did that with about 98% support in our U.S. business from our owner operators. We are providing support through the end of Q1 this year, so the support hasn't completely rolled off yet. It is more tapered support. But if you go back to that extra value meal program back in place, there were a couple of key metrics that we felt were going to be kind of definitional to success. One was that we were continuing to grow our share of lower income consumers. We did that in Q4. One was that we were going to improve our value and affordability scores. We delivered on that, and we are exactly in line as what we talked about earlier in our call in terms of where we expected to be in getting the incremental uplift on selling more EVMs to consumers. And so we feel like we have invested to kind of deliver against the consumer need, and that is kind of fundamental in the environment that we're operating in.
RKLZ,
And to double down on that,
QPTZ,
consumers are
RGTZ,
everyone was really taken off guard when you said that a few years ago McDonald's had lost its
IREZ,
value leadership. Do you think
PLTZ.
McDonald's has it back?
I think, as you heard us say several times, we're not going to get even on value. We're not going to not win on
Nice. Let's see. PG, Procter & Gamble, Higher. Okay. KMB, Kimberly Clark from yesterday. PG, Coca-Cola.
Shows that we can make those investments, meet the needs of consumers, and deliver strong top line and bottom line growth.
Now, another thing that Wall Street is really focused on are these tax returns coming soon. They expect 2026 tax refunds to be larger. How would that impact McDonald's? And is that something that you expect as well, especially for your core consumer?
Yeah, I think anything that is supportive to consumers by putting more money, obviously, into their pockets is going to help anyone like us who's in an industry that requires on consumers feeling like they have the affordability and ability to kind of get into our restaurants and transact with us. I think what I would say is we certainly expect conditions as we kind of look forward into 26 to remain challenging. But we're not focused on the external environment. We're focused on really kind of continuing to execute what's within our control. And we believe if we kind of continue delivering on that 3 for 3 as we talk about, we're going to continue to be able to deliver strong results regardless of the environment. And if there's an upside because consumers have more money through things like some of the stimulus that's going in place, we certainly believe we're really going to benefit disproportionately from kind of the upside that may happen there.
Are you seeing growth across all income cohorts, or are you sort of seeing this K-shaped economy that we're seeing elsewhere?
We've talked pretty consistently, certainly in our industry.
Okay, starting to see a little bounce now. Potential for a bounce. Okay, below the 50-day. This is the 6th time we've been below the 50-day.
That's why value and affordability is important, because obviously that's going to resonate to some consumers. But it's when you get that 3 for 3 right, you're kind of meeting the needs of all the consumers, and we want to win in every kind of consumer cohort. So I think that's certainly what we're doing.
And something else on top of investors' minds these days is the impact of GLP-1s. Now, Citi said that McDonald's is at the bottom of this drug. How should investors
Okay, still moving lower. Pretty solid selling here. People are getting nervous, it looks like. Defensive names are working, like Kimberly Clark, Coca-Cola. These are all driving higher. Okay. Procter & Gamble, SPHD. All right, it's pretty obvious where money's flowing.
Understand how we can continue to meet the needs of consumers there. The Big Arch is a great example of that because it was designed to meet that kind of satiating, larger burger format and do it in a
Low
way
tick alert minus 800.
to kind of our DNA and brand. The chicken is a huge opportunity area because as we talked about, as you referenced, it's twice the size of beef. We have significantly lower share in chicken. We think we've got a huge opportunity to kind of grow to meet the needs of consumers. And then, as you heard us speak about earlier, we had a really successful beverage test in the U.S. We had a very positive reaction from consumers when you look at that lineup, which had cold coffees, energy drinks, refreshers, craft sodas. That resonated really well. It drew us into a different consumer cohort, different parts of the day in our business, and we're really excited about the launch in our U.S. business later this year.
Okay, New York Fangs are all off. Tesla's off. Okay, Tesla below the 20 EMA, so that's going to stop a lot of people out. Let's see if we get a bounce. People are selling into this, so we can see this bounce probably after this 60-minute candle. S&P still moving lower.
Don't be passive progressive. Switch to get good coverage and savings for yourself.
Sorry, we'll get back.
Awesome. Love you, but goldfish have short memories. You like goldfish?
Crushed it.
I got two words, jobber payments. We ran a study inside our company. We're over $12,000 now collected for tips from our clients, 100% to our technicians. So me as a business owner, anytime my people can make more in the field, it makes me very happy as a business owner. So we run all our payment collection through jobber payments. We take deposits, 10 out of 10.
IRZ. VXX.
Good Thursday morning. If you have been watching me since 9 a.m., you should know already that I'm in the mood today. Pretty on fire. So then, here's one of the only things I care about in markets today. It's not yesterday's jobs report. It's not even the CPI data out tomorrow. It's the rout in software stocks. It's unrelenting. And since I'm getting asked a lot about what's going on to happen or what could happen next to these stocks, here is what I want to talk about. One, there are thousands of other stocks.
Interesting thing, tick cumulative is still rising.
Market is telling you it hates these stocks. So why are you still sniffing around them? Wait for things to stabilize before tying on that hero cape around your neck. And you will know the bottom is in these stocks when a key player comes out with evidence of business accelerated in the first quarter versus the fourth quarter. Doing that would be a super impressive sign given the AI development happening at Anthropic, OpenAI, and Google, and like 30 other companies I'm probably forgetting. I challenge Salesforce CEO Mark Benioff, for example, to Pre announced first quarter earnings this month. And as they say, that is that. All right, Bitcoin Investor Week is underway here in New York City. Talk about perfect timing for this. Is Bitcoin well off the highs and the triple bull searching for the next big catalyst? I'm sitting down with my colleague Julie Hine live at Chelsea Piers alongside Bitcoin Investor Week host and founder Anthony Podcat. Julie, take it away.
I'm here with Anthony. He's been here all week talking about crypto. He is CEO of Podcat Financial, and as he said, he organizes this Bitcoin Investor Week. So, how you feeling, Anthony? What's the vibes this week? As it feels like maybe we're in another crypto winter. Is that what people are talking about?
I think if you look around the room, no one's freaking out. Right? Everyone is cool, calm, and collected. I think they believe that Bitcoin is an asset that's going to do very well in the long run. And most of the people who are here, they've now lived through a couple of different cycles, right? There are still some people who are coming into the Bitcoin market, but most of the people, they came in 2017 or 2020. And so they've lived through 1, 2, maybe even 3 drawdowns of more than 50%. The thing that I will always compare it to is the global financial crisis saw public equities go down 50% in a single period. That has happened every 18 months for a decade in Bitcoin. And so the Bitcoiners are much more used to volatility than traditional public market investors. I think that's why you see people kind of just saying, look, we know where we are, we understand what's happening. Actually, if I liked it at $126,000, I'm more likely to buy it at $68,000.
Are you buying it at
I own more Bitcoin today than I ever have, and I think that you're going to continue to see people accumulate Bitcoin going forward because they understand the long-term value of a scarce digital asset in a world where they're going to continue to print money.
Where do you think understanding that you're talking about a long-term thesis, what do you think is going to happen in the short term? Do you think we've seen the bottom yet? Do you think we're going to bump along further here?
Calling bottoms is really hard. I'm not really sure, but I do think that one of the aspects that people are not paying attention to is that deflation is a much bigger risk than inflation in America. So if you look at Bitcoin, Bitcoin historically is a forward-looking market. And so in 2020, Bitcoin ran up 600%, and then we got hit with very high inflation. And investors were saying at the time, I'm buying gold and Bitcoin because I see it as an inflation hedge. I think Bitcoin will be the fastest horse. Now what I think you're seeing is investors are saying, wait a second, this inflation thing is not going to be a problem. I believe deflation is the bigger problem, and so they are actually going towards some of the hard assets or things that would do well in a deflationary type environment. So Bitcoin's just got to hang in there, right? This is just going to be a couple of months here where I think people will see liquidity drain from the market, see some deflationary concerns. The government actually, I think, is going to print more money rather than less. I think we'll bring interest rates down, and we'll be back to all-time highs in Bitcoin next couple of years.
I am curious, because it does feel like the market now in Bitcoin is different than it was in 2020 or 2018. I know you're one of the folks who were saying, and really this is a mantra among many people in crypto, we're waiting for adoption, we're waiting for institutional adoption. Here's institutional adoption. Maybe be careful what you wish for, because it does come with advantages and disadvantages. Things like there's lots more liquidity now, on the weekends or overnight when you tended to see some of these sell-offs.
All right, we're starting to see a little bit of a bounce now. People getting freaked out, letting their emotions guide their decisions. Best to just sit tight, see if we can bounce here or not. Stay in a range. We know that we're going to be choppy. We're starting to see some shorts covering on the New York FANG components. Most of the defensive stocks look just fine. Okay, defensive stocks look just fine. KMB taking off to the upside.
Compared to last April when the stock market went down 20%, more people lost money then than they did in Bitcoin, right? The stock market is much bigger in terms of the market cap percentage. And so people are going to win and lose money all the time in markets. That's the beauty of markets. But if you simply dollar cost average into Bitcoin and you hold it, you're going to do just fine. So if the gamblers on Wall Street want to come and gamble on a 40-ball asset, let them do it. Because what that does is it provides opportunities like this. Because those people want to leverage products and gamble, it allowed for people now who are just coming into Bitcoin to start accumulating at $68,000 rather than $126,000. So it's a gift from Wall Street that they push the price down and allow people to acquire more at these lower prices. This is not going to change where Bitcoin's going. It doesn't go to zero, it's going to $1 million at some point.
Are you willing to tell us how much you're down, or are you down?
I don't know where you acquired it. Yeah.
One Bitcoin equals one Bitcoin. I'm never.
JDST you're in? Okay, JDST.
I mean, I guess my other question is, are you transacting in Bitcoin? Are you, what is the sort of end game?
I use Bitcoin every single day to do the single most important thing Bitcoin does, which is protects my purchasing power over the long run from a government that continues to steal purchasing power from the people.
But you have to be able to purchase with it in
People
order.
never do that.
How does it protect? Walk me through that. How
Well, people take dollars that are being evaporated in their face. The dollar has lost over 30% of its purchasing power since 2020. What do? They try to get out of the dollar. You can go into real estate, you can go into gold, you can go into stocks, you can go into Bitcoin, you can go to any asset. Bitcoin has done a fantastic job of protecting your purchasing power over that period of time. You go back, even with all the volatility, Bitcoin is still up something like 700% since the fall of 2020.
This is something though that and I've had this conversation with someone like Michael Saylor as well, but I've never been able to wrap my head around. I understand what you're saying. However, if I'm buying gold or real estate or what have you, at some point I can we'll convert it back to dollars and use those dollars. But my understanding is that's not your plan. You're just going to hold Bitcoin. But it's not like you die and you have a bunch of Bitcoin. What's the end game?
I think that the fiat mindset is to constantly go back to dollars. And if you go and talk to a financial advisor, they'll say, let's go to safety, let's go to dollars. I believe, like millions of other people in the world, that dollars are the riskiest thing in your portfolio. The only thing in your portfolio that is guaranteed to lose value. Why would you consider that safe? It's guaranteed to lose value.
Safe is about something you can use.
Well, I think that, I use Bitcoin every single day. And if you go back over thousands and thousands of years, families have decided to store their value they have earned through hard work in things that persist over time. And so if you look at, let's say, Indian culture, people will go and they'll buy gold and they'll pass it down from generation to generation to generation. You cannot be the person who sells the family's gold. And so I think what Bitcoiners have realized is I'm going to take my Bitcoin and I'm going to give it to my grandchildren one day. And it's either going to be worth a lot or it's going to be worth a little. But I'm never going to sell it. No matter what happens, I'm never going to sell it. And I think that ability to pass on value over time is an incredibly valuable thing. And that's why Bitcoin, simply holding Bitcoin is using Bitcoin. It's doing its job. And sure, people have talked about it being used to buy coffees or do all this other stuff. But the most important thing is to protect the purchasing power first. Only once it is protecting your purchasing power, then
Okay, watching the S&P.
buy certain things. I think the most important part is why would I use something in a purchase that is going to be more valuable in the future? The whole reason why they devalue the dollar is because they're trying to spur economic activity. If I make the dollar less valuable next year, it'll incentivize people to spend less money. So I think you see stable coins being used for payments and Bitcoin being used for savings.
Guys, I have you on mute at the present time. We're risk off at the moment, so any bounce is what we're looking for. I'll move back above 6,900. Right now, I'm on mute. I'm on the phone, so I'm here, just waiting for a bounce, looking for stocks to reverse a little bit. There goes Google.
Low tick alert minus 800.
Okay. More low ticks. My apologies. We're still sitting here figuring out whether or not we're going to move lower. For now, though, you should expect to just stay risk off. Markets are not looking so bullish at the moment below the 50-day. So if we don't get buyers to step up, you have to remember February is not the strongest month of the year. On the other hand, it is actually one of the weaker months of the year. So just keep that in mind. I'm here. I'm just on mute at the moment. I'm not doing anything until the markets can get a bounce. We need to get back above 6,900. So any bounce here is what we're watching for. All right, looking weak again. Sorry, I'm on the phone. All right. It's just watching here for hedge flows to start to turn back up. You could sense that more than likely a lot of people are very nervous right now, maybe making some not so wise decisions. Best if you missed this particular move and you were still looking bullish, you didn't hedge or anything like that. Best to just kind of sit tight. The markets are not going to drop, 5% in one day. With VIX where it is, I got to get this. Sorry. All right, I got a feeling a lot of people are going to make the wrong decision here. It looks like we might bounce. No guarantees, but this is the 6th time we've hit the 50-day and reversed. The only issue I have is that it's February, and February is not a kind month. If you've traded for any length of time, you know that February tends to be a pretty weak time period in the year. So we got to get back above 6,900. That's the bottom line. Otherwise, risk off. We're not doing a whole lot. Okay, defensive stocks. Make sure you're checking out KMB, Kimberly-Clark, Coca-Cola, Procter & Gamble, Colgate, Clorox, etc. Companies like that. Okay, looks like we're going to push a bit lower here. All right, just watching. We're testing the lows again. Sorry about that. S&P 500. Okay. Okay, pretty ugly day. Risk off. Don't put any more money to work until we see a clear direction. Right now, the direction is down. We're below 6,900, so that's risk off. Look at defensive names.
DRIP. BRAI may resume in less than a minute. SBIT.
Hedge flows. This could drop off very quickly, so be very careful. We only got about 10 stocks on the NASDAQ 100 that are green at the moment. The rest are red. Microsoft starting to bounce. Netflix trying to bounce. NVIDIA bouncing. Apple's still moving lower. Google had a nice little spike there. Okay, watch gold and silver shorts. Gold and silver shorts looking better.
RTAC may resume in less than a minute.
CHOW.
Okay, these shorts are starting to show some activity. Okay, looking for a bounce. Nothing yet. Nothing yet. You ain't seen nothing yet. Okay, looking for a bop.
FSLY.
Still sitting here trying to figure out what it wants to do.
FSLY. FSLY.
All right, MACD trying to turn up. Wouldn't be surprised to see some stops get taken out here. Watch closely. I'm not in a big hurry. Okay, futures are still very weak. Again, defensive stocks, defensive stocks, defensive stocks.
FSLY. TZA. JDZG. I may resume in less than a minute. TZA.
Okay.
I may res in 10 seconds. TZA.
Watch here. We still negotiating at the lows. What time is it? 12:19. Let me shift gears here. Very quiet. Very quiet. Let me shift over to CNBC and see what they're talking about.
So that stock year to date's down 34%. Week to date, while others have bounced, it has not. It has not. Yeah. So why are you buying more now?
So I'm glad that I stayed disciplined on this one and have been averaging my way into it. I've been catching the falling knife, as we all say. So I started buying. I called it peak pessimism on this name when it fell all the way to 150. Then it fell to 125. I bought some more. Now it's fallen to 100 basically, and I just bought again. And I think that what's being missed right here, most software companies tend to be unprofitable, and we tend to value them based on just a multiple of their revenues, multiple of their sales. In this case, ServiceNow actually has growing revenues, 20% or so from their last earnings. They've got growing free cash flow above 30%. There's an actual...
This would be a nice place to rally off the low for some cheap option lottos. S&P.
Everything else will eventually start to show itself as value creation and not so much taken away as the street seems to be discounting.
We've also been telling you every day about the roll-on effect of the pullback in software hitting different areas than just pure play software. It's private credit. They've been hit over the last month. There now has been.
Can we get back above 6,900? That would be where I think we could probably get back to 6,900.
Next thing you know, you've got all these financial services stocks, LPL, Ameriprise, Charles Schwab, Raymond James, Stifel, and others getting hit pretty hard. We bring it up yet again today because Josh Brown, you know these guys well, so much so that you have partnered with them on various parts of your businesses. Yes. An altruist, full disclosure, and I'm an advisor.
I like the evening potential trade for the evening session. I like the potential because we're down a lot lower than we would have expected. So a bounce here wouldn't be surprising.
And what Altruist announced is pretty amazing. It's a feature of their in-house AI, which is called Hazel, that goes into tax mode. And literally, my advisors, the CFPs who work at my firm, can feed our clients tax-related information into this ecosystem that, of course, is very heavily protected, and get insights directly from Hazel telling us exactly what their situation is. And if you don't know much about tax work, I can just tell you they are saving people like weeks and months worth of time when they're dealing with high net worth families, business owners. So it spooked LPL, it spooked Schwab, it spooked Raymond James. Maybe it's not completely unfounded. I do think that those reactions were overreactions because we will see this type of technology available in many places. Altruist just happens to be a pioneer. They're very early to a lot of the tech trends. And I think maybe some of those moves are overdone, but the importance of what they launched and what other firms are launching.
Okay, futures are starting to rise. Futures are rising.
They absolutely are going to change the economics of the wealth management.
So can I go out on a bit of a limb and say it is overblown? So when we see the sell-off that's happening in the insurance companies because of a piece of flawed code, when we see the sell-off in the real estate servicers now, Jones Lang LaSalle's down like 12% today because of a Claude tool. Like all of these different companies selling off 10+% because a piece of code suddenly when is it going to be adopted by the companies? With Claude's cowork, it's got to be able to take over your entire machine and log in as you with your credentials.
Do you think
How long before you're willing to allow that in your company?
The sellers, I don't know the answer to this. Nobody will admit that they're selling. That's the first. I got calls all over Wall Street. I talked to asset managers. Nobody's like, yeah, somebody is.
Everybody.
What do you guys think the sellers are thinking? Are they thinking this is real disruption? These companies are screwed. I got to get out now. Or are they playing chess and saying, it doesn't matter if I think this is overblown? I can't have a stock down 20% in the next month because enough other people think. I think it's the latter, where people are just like, well, everyone else is scared, so let me sell first. But I'd love to hear what you guys think.
By the way, don't even look at a stock like Microsoft. I don't think we focus on it enough individually in the residual impact of Anthropic and the things that they've come out with recently, Claude for Work, etc. Microsoft is down. Look at it over a month.
Yeah, they're worried about Copilot. They're worried about Excel. They're worried about 30%. What do you guys
maybe
think the
rightfully
sellers
so. I'm thinking.
The sellers think that they want to get out before the next seller shows
So
up.
they don't believe
That's
it's disruption.
what's
They
going
don't
on.
believe it's
Well,
disruption.
they think it might, sure, it's going to be disruptive, but all of these companies having
All right, shorts covering a bit more.
There's been a narrative.
Looking for hedge flows to turn up. Still haven't turned up enough.
So everyone's been on edge saying, as soon as something looks sketchy, I gotta sell. And I think this is that moment.
All right, so let's squeeze in a break. So outside the U.S. trade beat the pants off inside the U.S. Last year. We're going to talk about that coming up. While more firms, big ones too, are dumping and pivoting the U.S. for other places. We will discuss. There are a few more to tell you about today and what it all means to your money next.
Okay.
Welcome back to Market Catalyst. I'm Julie Hyman here at Bitcoin Investor Week, the conference in New York City. I'm going to toss it on back, though, to our markets data editor, Jared Blicker. Jared, we got a mixed picture for stocks today.
Yes, we do. And the Dow is leading once again, pretty close to a record high, but not there. You can see it's holding over 50,000, up 153 points, or about 0.3%. And you can see it's a gap and go day, just kind of consolidating, not too far from the opening price. Meanwhile, tech is in last place among the large caps. It is dragging down the NASDAQ composite. You can see we started out green, but it drifted into red territory. Nevertheless, only down about 0.2%. And then we have the S&P 500, which has been in green territory all day, but only holding on to gains of about 10 basis points. I do want to point out the S&P 500 equal weight. That's a different calculation than the other S&P 500 that we were just looking at. That's market cap weighted. It's broader. Every stock gets one vote, and guess what? It has hit a record intraday high, and it is up 1/3 of 1%. Meanwhile, it's Russell 2000, a proxy for our small caps, that has drifted into negative territory, and the S&P 400, the mid caps. And I tell you, that's another record high for the mid-cap index as well. That's about just short of 0.5%. Let's take a quick look at the bond market before we do some.
Okay, nothing yet. I mean, we've got a little bit of futures pushing prices higher. That looks good.
The 30-year also down about 3 basis points there to 4.78%. And let's check out the U.S. dollar as well, just kind of barely in negative territory there. So in sector land, large cap sector land, we have defensive spending. Utilities and real estate both up about 1.5%. Then you got industrials and staples, each up 1%. Consumer discretionary up 0.5%, and the list goes on until you get to the bottom here. Communication services has switched place with tech for last place. Financials and energy also in the red. But the NASDAQ, as you're going to see, is a little bit not as pretty a picture as the Dow is. You can see a mixed picture for some of the bigger names, and I'm going to
Sorry, not a complete turn yet, but we're looking for more follow through here.
With Moomoo, turn data into sharper trends. And with Moomoo Payments, spot what matters, predict what's next, and decide with confidence. It's all on one place, from stocks and ETFs to options and crypto. Trade smart with Moomoo.
Elena, do you want your car fixed or what?
JPCG.
I need you to come home with the fucking car.
That's right. A game that's just another day at the office.
All right, maybe we get a turn here. A lot of people are short. Look for the shorts to start to cover.
Come play solitaire around the world. Ride with Tiki, unlock tropical destinations. Have your way through fun and challenging levels. Win big, collect tons of shiny rewards. Join the adventure. Thousands of levels await.
As a working mom, every dollar counts. And insurance was one of those things I thought I had to overpay for. Then I found Solvable. They compare rates from trusted carriers, so I know I'm getting the best coverage without wasting money. Now we're protected, and I'm saving more each month. Because keeping my family covered shouldn't bring us financial stress. Whether it's for auto, home, or both, Solvable makes saving simple. Get new rates today and see how much you could save with Solvable. LPTH.
This is Market Catalyst. I'm Julie Hyman, not in the studio today, but at Bitcoin Investor Week at Chelsea Piers in New York City. And I'm joined now not just to talk about crypto, but to talk about the broader tech ecosystem with Dan Ives, Wedbush Securities Managing Director and Global Head of Technology Research. Obviously, friend of the show, frequent guest with us here, Dan.
Great to be with you.
I don't usually talk to you about crypto, but here we are at this crypto thing. And I have to tell people, like, off air, I was like, why are you here, Dan? What are you going to talk? What's your thinking around crypto, the intersection of crypto and technology? What you want to let people know today?
I mean,
when you speak at the conference.
To me, it's really about the disruptive technology themes that we're seeing. And I think when you look what's happening with AI, I mean, I think a big thing is around like authentication, robotics, human proof. That's something, especially as it goes into things like blockchain. I think that's extremely important. So I think blockchain is a huge, when you look at utility, it's going to be a huge part about crypto. But the sell-off, it speaks to the sell-off in crypto, just like we're seeing this massive Armageddon-like sell-off in tech, specifically in software. It's created white knuckles in this market.
I mean, I've talked to some investors who have said this is sort of like an seeking market or a short attention span market. And one of the reasons we see risk off is that people are like, oh, what's the next new shiny thing? In some cases, it's been the literal shiny thing, meaning gold, and people go, it's that. But people are sort of bopping around more than they used to. I don't know if you're seeing that.
I think there's some of that, and obviously, I mean, you've talked about a lot. I think there's just hypersensitivity about disruptive technology and what that's doing to install base vendor. I mean, obviously, if you look at Salesforce,
ServiceNow, Oracle, Microsoft sell-offs. Look, in my career going back to the late 90s, I've never seen anything like it, a structural sell-off like this that we've seen in software. But to my point, if you look at earnings season, the $600-700 billion of capex, the multiplier dollars spent on video chip, $8-10 multiply across the rest of tech, I feel more emboldened about the bull thesis on tech and AI this year, despite obviously this massive pullback.
And even in software.
Look, I think this software sell-off will go down as a generational opportunity to own some of the stars. Because look, they're going to be a core part of the use cases. The view that a Salesforce, a ServiceNow is going to get disintermediated. I'm not saying on the edges, it's a headwind. We've talked about it.
Right.
But you're talking about hundreds of thousands of enterprise customers. They're not going with just a tool that is ultimately launched into the market relative to what install-based players are playing with.
Well, let me ask you this, because you and I were just talking as well about a piece in the Atlantic today by Josh Triangle, who looked at the potential for AI to replace jobs. And his thesis is sort of the differentiator is speed, right? That you're correct if this thing, the AI juggernaut, companies roll it out slowly. Companies tend to move slowly historically. But there is a case to be made that they could move faster because even now the AI is coding itself, for example, right? I think that some of the latest models, they used the past models to code the new models. So if AI is coding itself and can in fact like make its own infrastructure, more quickly, wouldn't that then be a risk, a more real risk to the software companies?
Yeah, but look, there are around the edges, there are risks, and there are going to be software companies that are disintermediated, especially like one-trick ponies and some of the pure plays. But when I look at software, I truly believe a lot of it is really autonomy. I mean, you haven't seen the monetization. A lot of the software companies are building out their stacks. A lot of companies are still in the build out the infrastructure, the database, the data center phase. I think when it comes to software is going to play a huge role in the build out. And I think when you look at the install base players, the Salesforce, ServiceNow, the Workday, some of the others, it's something where I think the market is mispricing what I believe is actually going to be a huge challenge. I could argue a lot of these software companies, as ServiceNow, is going to be exponentially bigger than it is today. And also, I'd say, it also comes down to CEOs. Just like you don't bet against Godfather of AI, Jensen, betting against McDermott, it's been the wrong move. That's also my view relative to what we're going to see in town.
What's the difference between those who are going to win and those who are not?
I think it's install base, it's moats, it's ones that are aggressive on building the suites. Like if you look at CrowdStrike, I think he's been an innovator relative to what George built, and from a stock perspective on AI. I think when Nikesh is doing on Palo Alto with CyberArk, but look, if they don't do CyberArk, then that maybe would have made them vulnerable. But they did CyberArk, so I think you're going to see a lot of acquisitions. You're going to see a lot of offensive moves in terms of being aggressive. But the ones that are on the treadmill at 2.5 speed, they'll be disintermediated. And I think.
But what does a moat even look like right now? Like, are there any real moats when the AI can code new software and new apps and new whatever for you at the drop of a hat?
I think now on the edges, that's obviously competitive, but the reality is the moats are these companies they're basically the hearts and lungs of operations, from Salesforce to Oracle to Microsoft. You go across software infrastructure. They're not just going to get ripped apart relative to a tool that comes and is viewed as going to disrupt the sector. That's why I just view the software sell-off. We will look back, just like a DeepSeek moment. Software sell-off is a DeepSeek moment that I think we sit here 6-12 months from now and be like, that was a golden mine opportunity.
I want to ask you something sort of related, back on the crypto side, and this is something that's been topical within the crypto world, and that's quantum. And the possibility that once we see quantum computing develop more, that it could be used to crack crypto algorithms and cause thefts in that world. I mean, I know I don't know how steeped you are in quantum at this point, but what do you think?
All right, taking their time pushing this back up, if they're going to push it at all. S&P.
I mean, my view, like on quantum's gonna be a huge opportunity as a growth there. We talk about the pure play names that ultimately feed into that. And also, I think a lot of that is like you could spend your whole life being like, okay, what's gonna happen when it comes? And a lot of times, as me and you have seen, in our whatever 50 years combined, in this industry, but the reality is that a lot of those things will come far worse and tight. Quantum, I view much more as a growth catalyst, an opportunity, than some sort of dystopian threat.
Dan, before I let you go, I have to acknowledge that there was a Barron's piece about you that talked about sort of the many hats that you wear and sort of explored whether those hats are in opposition to each other. And I just wanted to give you a chance to respond to that because I think it was, you're a very familiar face on financial shows and in the press. And I wanted to give you a chance to comment on that.
Okay. Look, I mean, it's I've covered tech for going back to the 80s, and being bullish on AI, bullish on tech, it's led to other opportunities, which I'm very open about. If I chew gum, Wedbush needs to approve. Okay, if I wear a hat, so the point is,
approve this hat. I don't know.
in this hat, yeah, maybe that's it. But the reality is, it's something where for me, I'm always looking at opportunity, but it's never for me. It's like I'm at the core. I'm bullish. People want to hate me for it, for being bullish, but that's always been who I am inside and outside. And it's led to other opportunities. Now, look, I'll continue to evaluate new opportunities and existing ones that make sense. But that's something where, I get it. It's something where when you break the mold, it definitely, others are going to notice. But, to me, it's like, I am who I am.
That is, I can endorse that.
And I like the pink. I appreciate it.
I'm not sure I can pull off the hat though. Thanks a lot, Dan. Appreciate it. Coming up next, we'll be back here, of course, at Bitcoin Investor Week. We're going to talk to Scott Melker, the wolf of all streets. That's next.
BRA may res in 10 seconds.
Cada Truck Month todas presumen, pero solo una 100 camionetas que valen la pena. Ram Truck Month, la línea Lightning más potente de gasolina en la tienda. La mejor garantía de
All right, no follow through yet.
hecha para durar. En ofertas grandes durante Ram Truck Month, la única que vale la pena. Nada limita a Ram. Ahora, compra esta Ram.
Why am I getting Spanish? Fucking. All right, we're still testing this low. Futures, no follow through.
It's time now for our stock of the hour, and we're looking at Rivian, whose shares are down about 28% this year. The EV maker reports earnings after the closing bell, so let's bring in Bloomberg Tech co-host Ed Ludlow for a preview. Ed, this is a company that has not yet reported a profit. It's still losing money. Will that change this quarter?
Not anytime soon. I mean, you're right to point out the stock so far in 2026 because toward the end of 2025, and we went deep on it, right, there was a lot of confidence that Rivian was starting to get its act together on the AI and autonomous driving story. And the big catalyst of the first part of this year is that it is moving towards production of its mass market product. Until this point, it's had very low volume, niche product. And that's kind of unwrapped. The analysts are very, very honed in on this idea that actually, fundamentally, nothing's changed. That new product, the R2, is not yet here. Volumes are still low, and that loss still continues to compound.
So this R2 platform that
a lot of people are excited about because this will help make Rivian a household name rather than something for, the upper ladder of the K-shaped economy. Where are we at with that? What's the timeline for this product?
Yeah, so I mean, just this last week, Rivian's been rolling out early access to the R2 to influencers and automotive journalists to kind of say, like, look how fantastic it is for the price point. You'll remember that they hard pivoted the production plan to be at their existing Illinois plant. They had proposed to do it at a brand new plant in Georgia, but that all kind of fell behind. Even so, they hope to start building it within this first half of the year. And that's the pitch, right? It's a smaller form factor SUV, something more like a Toyota RAV4. The difficulty that Rivian's got is that in the time that they've announced it and worked on it, and there's a beautiful shot of one there, I think that I was standing next to the cameraman when he did that, the rest of the world's caught up. There are many EV models of that form factor out there at whatever price point. So, yeah.
All right, something we'll definitely listen for in the conference call today. Bloomberg Tech co-host Ed Ludlow with the latest on Rivian. Coming up, Nike working to turn around its business as our interview with CEO Elliot Hill will reveal next. This is Bloomberg. So many in-network doctors on ZocDoc. Mom, we need you to focus. Can Abby come over for Friday? Dr. Anderson has you back at home in no time. No? Mom, stay with me. We need snacks. And liquid snacks. I left my water bottle at school. Really? Dr. Estelle is comforting. Dad didn't rush me. Dad, you can see me today. Look. We're losing.
You've got options. Download the ZocDoc app today.
Where it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. As nations compete at the Olympics in Italy, Nike President and CEO Elliot Hill spoke exclusively with our roommate Bostic in Milan about how Nike is addressing segments of the sneaker market on its path back to growth.
I may resume in less than a minute.
There's no question. You see where the stock we held up over the 16 months. The focus on sport, the focus on growth. They understand then the portfolio that we have. 3 strong brands: Nike, Converse, and Jordan. The focus on sport and how we're segmenting each of the brands by sport, and then ultimately paying it off in 190 countries around the world is only Nike can do at the size and scale that we are.
When I talk to analysts on Wall Street, they're relatively complimentary of what you've done, but they are still concerned about sales growth, which is still relatively flat. They're concerned about profitability, which to a certain extent is not quite there, at least not to their liking. When do you get there? When do you get there to a sustainable growth rate on revenue, and more importantly, generating more profits and wider margins?
One of the things that we've talked a lot about is what is the top line growth.
Still testing the low.
And the bottom line expectations. We're confident that we'll be able to get there. We're confident that the sport.
Okay, so risk off.
Those 3 brands and portfolio.
Shit. We're gonna move lower now.
Low tick alert.
Low tick alert.
In the marketplace, and so the newness and freshness is working. We had some proof points in the last quarter. North America being back to growth, which is a strong result for us. It's our largest reporting segment, running back to double-digit growth.
I'd like to sell some premium down here, 0 day, but I don't know, the risk is just so high. It's better to just like wait till we get a bounce, let the institutions do all the heavy lifting.
Into North America and not necessarily broad-based across the globe.
The focus was across the entire globe in terms of the wholesale side of the business. I think the team in North America, led by Tom Petty, who's a seasoned veteran, he has the relationship.
Still range bound for now.
Start to see that across the rest of the world as desire for our retail partners to serve their consumers. We have a joint consumer, and they want access to our brands.
I mean, Nike gravitated away from those retail partners to a certain extent back in the early 2020s. I know they kind of tried to reset.
Keurig, Dr. Pepper, KDP. Okay, we're just kind of flat at the moment. Keurig, Dr. Pepper. Okay, above the 200-day, we're looking for this to continue higher. I got the March 30 call. Keurig, Dr. Pepper. That's looking okay. Walmart. We did buy some Walmart on the dip yesterday. Bought Walmart on the dip. 130, 135 call verticals.
Low, tick alert, minus 800.
That was Nike CEO Elliot Hill with Bloomberg's Romain Bostic, who anchors the close, speaking from Milan. Now, we look at the markets, just to give you a check on how this stock sell-off is shaping out.
Okay. Are we testing the low here? Maybe take out some stops? Or do we just keep going? Futures continue. Hedge flows still kind of like grinding along here.
Shipping is the backbone and the engine of global economy. Practically everything our society needs gets transported by sea. But the mere size of it means that it's responsible for 3% of global emissions. Global regulations are vital to progress society towards net zero. Today, the industry is seeing a delay in making decisions. This creates an environment where there is a level of uncertainty of what happens next and what that means to the world. What we've learned being a 100-year supplier for the marine sector is at times of uncertainty, the best thing to do is to up the collaboration. When we work with our customers on research and development, as well as technology for making abatement, what dual fuel vessels to choose, we can really help them beyond just being their supplier and work with them to help the solutions of tomorrow be ready when they need them.
Okay, we're coming out of this moving lower, so it looks like they're not finished, folks.
If you ever come face to face with a grizzly, the only real chance you have is to stay completely relaxed. And what better way to stay relaxed than Candy Crush Saga? Stay calm. Download
All right. All right, so there is a possibility that we see something like this. Okay, there's a possibility we see something like this. Oops. Okay, back down to that low that we put in last week. Big range. All right, 6,800 would be that recent low, or just a little bit below that 6,800.
Low, tick alert, minus 800.
This is Balance of Power with Joe Matthew and Katie Lyons.
Extreme low, tick alert.
Our extreme low tick.
Welcome to Thursday edition as we count down to a funding deadline at the Department of Homeland Security with no agreement in place on ICE restrictions. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for joining us, Kaylee.
S&P is still dropping off here.
Yeah, Operation Metro Surge apparently is coming to an
now we're going to be leaving the Minneapolis area. Of course, leaving thousands there still. Apparently, that larger drawdown is now happening. The question is it a change of heart on the Trump administration's part in regards to the operations there that's happening to assuage Democratic concerns about the way in which this conflict has been handled?
Okay, so that low that we put in previously, we're coming down to that level now. Very large range. It's possible we bounce down here. Just check out the defensive names like SCHD, SPHD, Coca-Cola, PepsiCo, Procter & Gamble, Colgate, Clorox, Kimberly-Clark. All of these names are defensive. And see a bid. We got Walmart as well, break into the upside. Walmart, Kimberly-Clark, turning the corner, looking very bullish. Kimberly-Clark. Keurig Dr. Pepper, above the 200-day, looking for a follow-through.
Indeed, we will, just like we're seeing what comes next in today's trading day. So let's go and check on the markets now from New York. And we turn to Charlie Bell.
Thank you very much. Welcome back again. I know it's just 4 days in, but welcome back. Good to have you with us. We have got the Dow, the S&P, NASDAQ, all trading lower right now. We got
Little bounce.
fast-moving markets on this Thursday here. The S&P down 94%, drop there of 1.3%.
Okay, taking out some stops down here. Is that what they're going to do? Let's see if there's people interested in buying down here. I'd be interested if we could bounce and take out the top of that rectangle.
Gold is down $142 the ounce at $49.42. That is a drop there of 2.8%. Silver now down 10.3%, 75.57 on spot.
Okay, so we're taking out some stops now. Very likely that we come down and test this triple bottom area.
And the president wants you to lower that. JP Morgan Chase shares down now by 3.4%. Again, recapping here, stocks lower. Cannot ignore Dow Transports down 5.5%.
S&P is trying to bounce here. Oh boy. Hedge flows. All right.
All right, Charlie Bell, thank you so much. Checking out the Thursday trading action. And for most people, a Thursday would mean we are 1 day away from the end of the work week, and Friday would be upon us. But of course, here in Washington, at least if you are an elected representative on Capitol Hill,
SCHD starting to see a little profit taking. SPHD. All right, both of these are seeing a little profit taking at the moment. Constellation Energy. Okay, looking for a follow through. Higher highs and higher lows, likely. Best case scenario, higher highs and higher lows. Okay, Microsoft did bounce off the low. What's Robinhood doing? Robinhood, I would like to sell some credit spreads. Right now, I'm not doing anything. Just in case we get another flush lower.
one Republican official does tell Bloomberg News that an option being put on the table could be for the Senate Banking Committee, as you outlined, to take over the investigation or lead an investigation, presumably to have the Department of Justice let up on its investigation. But Tom Tillis says that is not going to be a viable option.
I really do think Warsh is a great nominee. In fact, the short list
came
is
in
great. I told the president that. But I'm not going to have an investigation out there because I still think it speaks to the very thing that I moved quickly to make a point on the Sunday night when the investigation revelation was there. We have to have an independent Fed, and we can't finesse this. They either need to move forward with a compelling investigation that convinces me I was wrong, or resolve the current investigation and move on.
Joe and Kaylee, I then pressed Senator Tillis to see if he could confirm that these negotiations are happening behind the scenes with the White House. He said that he would not detail his private conversations with the administration, though it was interesting to hear him also add that he felt that the administration was actually caught off guard by this investigation that was launched by the Department of Justice into Jerome Powell. So it's one of those threads that we're going to have to keep following closely here because, as you well know, Powell's term as chair is up in May, and this is a process that actually does take some time. While Warsh has been broadly applauded, this typically would have been considered a pretty easy confirmation hearing. It's going to take some weeks at least to get going because he has to meet privately with all the members here in the Senate before we can even talk about setting that potential hearing date.
So this is a thread we will continue to follow, as you say, Tyler. Another thread we're following, of course, today, knowing that the deadline looms tomorrow to keep the Department of Homeland Security funded or risk shutting it down. Has there been any progress today that you sense on Capitol Hill to avoid that outcome, or are we just expecting everyone to get on their planes and deal with this on the other side of recess?
Well, Kaylee, it depends on who you ask. I did have a conversation with the lead Republican negotiator for DHS funding, that's Senator Katie Britt, a Republican from Alabama. She told me that they have made, quote, significant strides when it comes to negotiation. She's talking about the sides sending a text back and forth to each other. But when you ask Democrats, they're saying that the proposals being put on the table by the White House is not enough to actually amount to getting their votes, not for the full fiscal year funding for DHS that appears to be an option that is long gone at this point, but for potentially supporting another continuing resolution for potentially 2 weeks, as we just saw for DHS. And of course, as you all know, there was that breaking news this morning. President Trump's borders are confirming that they are going to end that surge in Minnesota.
Constellation Energy looking for a follow through. What's Chevron doing? Chevron.
Bloomberg's Tyler Kendall live on Capitol Hill for us. Thank you so much. And sticking on Capitol Hill here on Bloomberg TV and radio, I'm pleased to say also joining us live now is Republican Senator Shelley Moore Capito of West Virginia, the chair of the Committee on Environment and Public Works. Senator Capito, thank you so much for being back with us. Is it your expectation that the Department of Homeland Security is going to be shutting down come midnight tomorrow, or do you see an 11th hour opportunity to avert that outcome today?
Right now, I would have to say that it looks fairly inevitable that we will have a partial shutdown of the Department of Homeland Security. I think it's good to frame that. Remember, we did pass a lot of bills and the president signed into law. So 96% of the government is fully functioning. But that critical piece of Homeland Security in all likelihood will shut down. But I am for extending the time for debate. I am for making improvements such as Senator Britt was able to negotiate into the Homeland Security bill. We need to move beyond this and make sure that our Coast Guard, our TSA, and our Secret Service, and our FEMA are all funded along with our Border Patrol and ICE.
Senator, it's good to see you. I wondered your thoughts on this approach that some Democrats are taking in the House. Rosa DeLauro has a bill that would essentially strip ICE itself away from the other agencies under DHS, like the TSA, FEMA, the Coast Guard. If the House accomplished that, would that even be entertained in the Senate?
I don't think that's a good strategy. We've got to look at Homeland Security in the whole.
So far, it looks like stops being taken out.
Enforcement of our not just immigration laws, but our ability
designated and are under deportation orders, and that's what ICE does. And so I'm fully supportive of the efforts that they've moved forward, and the same with Border Patrol. I mean, can we make improvements? Yes, and improvements are built into the bill. More cameras, more training, more IG or inspectors, inspections. These improvements can be made. They're already built into the bill that the Democrats will not accept. And I think they're using this as a political statement. I think if we pull it out, it becomes even more polarized and more political.
Well, as we consider the politicization of the ICE issue specifically, and of course has been a focal, or the focal point of that has been in Minnesota and Minneapolis, specifically in the aftermath of the two U.S. citizens who were killed. We learned from Tom Homan, the Borders are today, that they are going to be drawing down Operation Metro Surge in Minnesota. Let's take a listen to what Mr. Homan said earlier.
In success that has been made arresting public safety threats and other priorities since this surge operation
in
began,
10 seconds.
as well as the unprecedented levels of coordination we have obtained from state officials and local law enforcement. I have proposed, and President Trump has concurred, that this surge operation conclude. A significant drawdown has already been underway this week, and will continue to the next week.
So if we are at the conclusion of this operation, Senator, with the benefit of hindsight, did the operation surge too far?
Well, here, what I'm reading and what he's saying is the key component that he's emphasizing is the coordination between state and local. And I'm not sure that that was there before the temperature went way up. And then I think this has been part of the compromise between that Tom Homan was able to forge with state and local authorities and with ICE and Border Patrol. Let's lower the temperature, let's work together as law enforcement officers, and let's get the worst of the worst out of here. And I think those are reasonable propositions. Did it go too far? I think obviously mistakes have been made and had some very life-ending and altering results. And for that, I think we all wish we could go back and change that. But I think lowering the temperature, removing themselves from the operation, leaving it to state and locals, that's what we need to do. We need to have that coordinated effect.
You know, it's interesting, Senator, we've talked to a number of your colleagues, Republican senators, about the issue of demasking, and we've heard the arguments on both sides of it. It appears to be a breaking point. And I'm wondering if demasking is a non-starter for you.
You know, in my view, that's just sort of an issue that I think gains a lot of attention. We just obviously, as a nation, went through a big masking issue during COVID, but also the protesters in New York, they were all masked, and we were saying, you know, if you're protesting, we need to be able to see your face. And then now we see the same sort of argument on the opposite side. I think that we have to do this on a case-by-case basis. We have to protect our officers. And I think the protesters in Minneapolis showed that they're willing to dox, threaten families, and threaten the health and security of a federal law enforcement officer, which in and of itself is pretty frightening. So I think maybe when the temperature goes down, we'll see more abilities for identifications. But I do want to reserve the right for our officers to wear a mask if they feel their life's in danger. Yes.
Senator, I'd like to switch gears as we are expecting later this hour President Trump to be appearing at the White House with the administrator of the EPA, Lee Zeldin, to formally revoke the so-called endangerment finding around greenhouse gases. Lee Zeldin calls this the largest act of deregulation in the history of the United States. But I ask you, given your chairship of the Environment and Public Works Committee, is it too large an act of deregulation? Could this not have negative environmental consequences?
No. We have environmental laws that are strict, stringent, and they're adhered to. What this has done is taken an issue in the early Obama administration and ballooned it up into what can we do for global carbon emissions, and what we see, and as you read articles, different opinion articles from different papers, some that are very liberal papers have said, yes, the endangerment finding went too far. You cannot have the executive take control of the legislative prerogatives of Congress. And that's what's happened, and it's stayed. It's going to be the largest, I think, economic deregulation that we've seen. I'm sure it will be litigated, but I feel confident that he's on firm ground, especially in light of some of the past decisions by the Supreme Court that we've seen that have said the executive and the agencies have to stay within the boundaries that Congress has set. And an endangerment finding goes way beyond that.
Really interesting. I don't know if you were there, Senator, but the President of the United States was awarded the undisputed champion of beautiful, clean coal trophy yesterday at the White House. Peabody Energy, Jim Gretsch actually gave it to him. In the effort to celebrate an order that the President made directing the Pentagon to buy electricity from coal-fired power plants. What does that mean for the industry in West Virginia, this Pentagon deal?
Well, this provides the certainty to the coal industry, but it also provides a lot of balance and certainty to the nation. Let's just look at this practically. Over the last 2 to 3 weeks, we've had these amazingly low temperatures. If you look at the energy, who's providing the energy to warm our homes? What source? Coal has had a major role here, along with natural gas and nuclear. And so we have to preserve these baseload energy availabilities to do a lot of things, but just the basic needs of heating our homes and making sure that our hospitals are open, all of these things. So the president's a big fan of coal. Coal country loves the president. I was there yesterday. It means longer life for a lot of our coal-producing power plants, but also more coal mining jobs. They're doing it better, safer, and cleaner than they ever have, and it just makes a lot of sense for our nation.
Senator, we just have a minute left, but I know you today have officially signed on to the Save America Act that passed the House of Representatives last night, of course, a voter ID piece of legislation. Your Republican colleague, Senator Lisa Murkowski, has suggested that legislation such as this could have the effect of federalizing elections. We know President Trump has had made some comments about nationalizing elections as well. Is that an idea you stand behind, or do you have concern about that?
Well, yeah, I don't want to federalize our elections so that every state has the same election parameters and our secretaries of states can't form and function their election practices that their legislature puts forward. So this doesn't do this. This basically says you just have to prove that you're an American citizen to vote in an American election. It sounds simple. I would say it's probably not as simple as it sounds, because I think some of the identification issues could pose a challenge to some secretaries of state, whether it be a passport or birth certificate or a real ID card. And some of these issues have been raised, but honestly, it's a simple concept. Many states have voter ID. Mine's one of them.
Senator, it's great to have you back on Bloomberg. Republican Shelley Moore Capito, West Virginia, live from Capitol Hill. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll assemble our political panel next and get into the shutdown politics once again. This is getting to be a routine. Stay with us. Much more straight ahead on Bloomberg TV and radio.
The United States is the largest and the most profitable market in the world.
In 10 seconds.
And that's why it's so important for us to be relevant here and for us to continue to grow and to add scale.
AI and the recent AI trends speak to how quickly the technology industry is evolving. We're here to advise our clients in terms of not only what's happening today, but how we see the market evolving and being at the forefront of the next big trends.
Our experience with AI matters. So does our insight across industries. But the real difference is how we bring it all together. Joy together makes progress.
Hey, Nissan. Great. You gotta put it through its paces. He can take it.
Hurry into the Nissan Now sales event featuring Rogue, Pathfinder, and Frontier. Nissan, #1 in new vehicle quality. Now get 2 anticipated on select SUVs for well-qualified buyers, or get $3,500 customer cash on road.
Shopping is hard. I'm sad about IT. Go to the mall? I can't even go to the bathroom alone. I have to buy everything in 3 sizes to find one that fits. No need for office. I don't know where to work. I wear this on vacation.
Stitch Fix makes shopping easy. Just share your size, style, and budget, and your stylist is personalized looks right to your door. That was easy. Stitch Fix, online personal styling for everyone. Take your style quiz today.
AI and agentic AI into their team center and their factory automation. operating system. We're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
Goodness, we like tech. Live.
Bringing you up to the minute aerospace news whenever and wherever it happens. I'm Guy Johnson at the Dubai Air Show, and this is Bloomberg.
How are your discussions with President Trump? The administration's been great to work with. Ford is the most American car company. We produce the most hourly workers. We made progress on mitigating some of the fears. We have more work to do. How do you make sure that you're winning straight out of the gate? Give us a few sides. We feel we have the right people, the right tools, the right spirit across what Red Bull means and what Ford means.
Open Internet live every weekday. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Good morning, this is Big Bang Day right here. I'm Lizzie Burden in London, and these are the stories that set our agenda. Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Worst level of the session again with the Dow, the S&P, NASDAQ all slumping right now. We've got the S&P down 92, 68.48 where we stand. Volatility again shaking Wall Street. Concerns over tech profits for an industry rout after Cisco's weak margin outlook. Cisco now plunging by 11.9%. The Dow is down 1.3%, down 651 points. Again, keeping it all in context. S&P down 1.3%, NASDAQ down 1.8%, the Russell 2000 index of small cap shares down 2.3%. The VIX at 20, 10-year yield 4.10% with a 2-year 3.46%. Gold selling off by 3.2%, 49.22 the ounce. Silver's plunging another 10.5%, just above 75 right now. West Texas Intermediate crude down 3.1%, 62.63 a barrel. And Bitcoin 65,290 on Bitcoin, down now by 3.6%. An ETF tracking software companies is slumping 3.7%. That is IGV, the iShares Expanded Tech Sector ETF, again down by 3.7%. Earnings news: McDonald's U.S. sales grew at the fastest pace in more than 2 years in the fourth quarter. On a down day for much of the market, McDonald's shares are gaining. McDonald's up now by 2.5%. Rival Restaurant Brands International, that is apparently Burger King, it reported earnings this morning, lower after mixed fourth quarter results. QSR, quick service restaurant on the ticker, it is down by 5.4%. Rival Wendy's also lower now, down by about 4.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. The team is reunited. Kaylee Lines and Joe Matthew.
Reunited, and it feels so good, Charlie Pella. Thank you so much. We are here in Washington, and we're keeping an eye right now on the Senate floor, where they are trying to take at least a procedural step forward in an attempt by the Republican majority to keep the Department of Homeland Security funded beyond the deadline of midnight tomorrow. They're trying to invoke cloture on a motion to proceed on the DHS bill that the House passed. This isn't necessarily a vote on final passage, but this may not be successful either. And the anticipation here in Washington is that despite whatever effort the Senate puts up today and the efforts of negotiators maybe to reach some kind of agreement, Joe, it's highly likely there will be a partial shutdown tomorrow, and senators will go on their recess and we'll have to reconvene come, a week and change?
Yeah, because House is going away too, right? And there are some really big codels this weekend, as we talked about the security conference. The jets are taking off one way or the other here. So following our conversation with the senator, it's not sounding like a lot has changed since the White House brought its counteroffer. And boy, the headlines coming out of Minnesota today certainly have our attention as well. You wonder how this may or may not have impacted the debate if it took place a couple of weeks ago. But the administration is pulling back from the Twin Cities. Tom Homan announcing earlier today that ICE agents are coming out of the city. It was 700 removed a couple of weeks ago, remembering there were still a couple of thousand agents at work, more than 2,000, and they are now decamping, which we want to talk about.
So it looks like to me they're killing premium again. They got everybody down here buying puts and buying calls, and they're just going to sit right here. We won't be able to tell what we're going to do until tomorrow. Until we get back above 6,900. To be very clear, I am defensive. I am risk off. I'm buying things like Walmart, Kimberly-Clark, some of the energy names like Chevron on dips, Procter & Gamble, Coca-Cola, Pepsi. And just sitting tight, not doing much of anything.
Basically unraveling the operation, what do they call it? Operation Metro Surge. Well, they're not surging anymore. They're getting out. And they've also said some things that actually add to the negotiations going on, in Congress over DHS funding. And one is that they're not going to make arrests anymore around schools and churches and hospitals, which was one of the things that Democrats had asked for, and that they were going to start working better with state and local, which is one of the fundamental aspects of Democratic negotiating positions. And I think the fact that they also pulled out of all these other towns where they had these surges, LA, Portland, places like that, is a indication that this administration is raising the white flag and understands that the overreach has not only affected their ability to get billed through Congress on funding DHS, but also it's crushing their polling numbers in advance of the midterm election. And I think those two twin pillars are exactly what's bringing us to the potential of getting a deal sometime soon on DHS.
Well, as Rick points us to the midterms, that's still 9 months out, Doug, and I wonder if taking this away potentially is a talking point. If we've seen a lot of these operations unsurging, as Rick is suggesting, does that mean Democrats are going to lose one of their best political arguments as we get closer to this cycle?
I don't think so, because immigration is so central to President Trump's pitch. I mean, it's really his main issue, and incredibly, he's turned it into a Democratic issue. I don't think he's going to stop. I mean, there's been reports that they are
Low ticker at -800.
Hold people, that they're building sort of camps for people that they think they want to deport. I suspect that President Trump won't be able to resist. A state or a city, a blue state might piss him off, might do something, and he's going to respond. And so I think, this may be a temporary reprieve, and certainly a great reprieve for the people of Minnesota who've been through so much. But this isn't going anywhere.
It's interesting to see Greg Bovino back on social media. This is, of course, the gentleman who was dispatched from Minneapolis when Tom Homan went to try to lower the temperature. Back on X, replying to posts as we read, including one from the governor of Illinois, J.B. Pritzker, who is calling for Bovino to be fired. Quote, "Perhaps we could meet for a sugar-free slice of heirloom apple pie on me," he writes. So the online trolling has not ended here, Rick, and I wonder if we should be looking at this action in Minneapolis in isolation, or if this is going to be what takes place around the country, when you've got Bovino and others still ready to surge.
FSLY.
Yeah, first, my apologies to Greg Bovino. I think I called him Greg Bovine, and I didn't mean to imply that he was a cow or anything. My mistake. And secondarily, look, I think this is an issue in transition, right? I mean, I think the administration came out all guns blazing. For 1 year, we saw nothing but chaos on the streets of blue cities around America, and it was only a few months ago that we had the military dispatched to LA, and so like this constant increase in anxiety and tempo of the administration's efforts actually didn't work. I mean, we spoke the other day about the fact that even today, only a small portion of the 400,000 people arrested, which, by the way, was less than the last year of the Biden administration, were hardened criminals. And so there's all this, discussion amongst Republican ranks, like, hey, we spent billions of dollars, we've created a political mess around the country, our image is tarnished by this, and we actually aren't getting what we wanted to get done. And so I do think there's a lot going on inside the White House. I can't imagine what the conversations are with Stephen Miller these days, because this was his strategy to basically occupy blue America, with ICE agents, and it looks like that's not happening anymore. And so we'll see. Doug's right. You never can tell what's going to happen in this administration. But I think as you see this thing deconflict, one, it is good for the country, but two, it gives us a chance to sort of have a conversation about what is the right approach to immigration, because what's currently happening is being supported by the American people.
Well, as we consider, you never know what's going to happen with this administration. You also never know what's going to happen in terms of the revolving door of arrivals and departures within it, Doug. And given your former purview at the FTC, I do want to ask you about the news we got today that the top antitrust official at the Department of Justice, Abigail Slater, has resigned. We understand a resignation that came at the request of the White House. What does her departure signal to you about the current M&A questions that are underway or being considered by the DOJ, and what the path forward is going to look like in her absence?
Well, Gail's firing is a story of just dysfunction and corruption that's going on in this administration. I mean, almost immediately after she came in, there was reports that she was being sidelined by highly paid lobbyists who had really good access to bonding Trump, HP, Juniper being the case. And since then, basically, she's not been in charge, and she's been a dead woman walking. The lobbyists, Mike Davis and others, take a lot of money from these companies to get their mergers through, and frankly, it's sort of banana republic stuff here. And so I think what I'm watching is, what does JD Vance do? Because Gail Slater was JD Vance's senior economic advisor. And JD Vance, like a year ago, was a populist warrior focused on big tech enforcement. So where is he on this, and how much does this drag him down in his political ambitions to sort of abandon his top staffer in such an ugly way?
We're all old enough to remember J.D. Vance as a fan of Lena Khan, I believe. That, by the way, was a 78 to 19 vote in which she was confirmed. You call it a firing. Rick Davis, the statement from Slater says, "It is with great sadness and abiding hope that I leave my role." What do you make of this move? And does this usher in the animal spirits that everybody was talking about when President Trump came back in the White House?
Wow, that's a lot. First of all, when in doubt, blame it on lobbyists. This administration came in with a lot of energy.
Wow, that killing premium again. Jeez, just sitting here having lunch.
So at the end of the day, that's just not been happening. And if anything, it's been this big hug of Silicon Valley and that kind of thing. So it'll be interesting to see whether or not this administration can change course and go back to where J.D. Vance was versus where Donald Trump has put them. Democrats are seeing this as a huge gain for them. They had a base around the country for protecting small business and things like that, and they lost that mojo. And Doug is
Walmart, Walmart trending above the 20 EMA. So you know how the 20 EMA works. Hopefully the 20 EMA catches up pretty quickly, because we're getting a bit extended on Walmart. I have the 130, 135 call spread.
Notion. Should we expect that this is like, if you want to get a merger done, now is your window of opportunity to strike?
Look, if you want to pay the lobbyists who are in charge of merger control, yeah, you can get your merger done. They haven't blocked a single merger at this point. So, I mean, the animal spirits are fully in effect, but I think the concern is the breakdown in the sort of rule of law that we have here. And the thing I'm going to be watching, it's been reported, and I've heard from sources, that the Live Nation lawsuit, which seeks to protect people buying tickets, Kid Rock, famous friends and allies of the president, they're looking to settle that potentially favorably for the company, and that was the last straw for Gail. If that happens,
Looks like we could see another bear flag. I'm a little reluctant to do anything because it looks like we could drop off very easily. So defensive stocks don't look like this at all. Okay, defensive stocks are doing the opposite. Walmart, Coca-Cola. Coca-Cola. Kimberly Clark. PepsiCo. All of these are working. PepsiCo, Keurig Dr. Pepper, Monster Beverages. What's Celsius doing? Celsius, haven't looked at it in a while. That pulled back. Clorox at the highs. Colgate at the highs. So you see where all the money is. Materials, XLB, taking a break. SCHD and SPHD at the highs. Gold and silver. Gold, silver. Silver trying to lose the 50-day again.
MTRT may rest in 10 seconds.
We see active ETFs differently. We collaborate, designing them to remain strong, preparing them to weather the ups and downs of the market. That's what sets our active ETFs apart, so they can be rooted at the core of the portfolio. They're meticulously crafted to endure. Capital Group, actively different, active ETFs.
VRA unhalted down.
The Goldman Sachs 10,000 Small Businesses program was a game changer for me. It took us from being
Yeah, definitely consumer staples. I mean, that just jumps out at you. Consumer staples, utilities, all the defensive names, definitely getting the bid. XLV, we're getting some healthcare, little bounce. XRT, retail, nope. XLY, consumer discretionary, nope. Okay, we're starting to rise a little bit here. American Electric Power, energy, bullish. T-Mobile up again today. T-Mobile up again for a second day. Costco. Costco looks like that's going to break out. BJ, wholesale, breaking out. Okay, BJ, Biogen looking good. XEL Energy, XL Energy. Okay, Orly Automotive, Orly Automotive, O'Reilly rather, O'Reilly. That's turning back up. Ross Stores, ROST. Okay, that's okay. Ross Stores. That looks like it's breaking higher. Mondelez above the 200-day. Regeneron, REGN. Google having a little pop earlier. Google still got a lot of work to do. Google. Amgen, AMGN, Amgen. Axon body cams, etc. No, that's not very interesting there. Vertex, VRTX. Yep. AstraZeneca, AZN.
Charlie, thank you so much. A lot more Charlie on the markets coming up at the top of the hour.
Microsoft turning. Microsoft still basing down here. Microsoft.
There is one idea here. Before we bring in Congressman Mike Flood, we're going to hear from a Republican point of view here. The gentleman from Nebraska will give us his take on this. Still in town here. There's still a chance. There was a piece of legislation that emerged in the House yesterday. Democrat Rosa DeLauro put forth that would essentially
Futures on the move now. Futures, S&P starting to turn back up.
everything else under DHS that includes the agencies we've been talking about, FEMA, the Coast Guard, the TSA, and handle ICE on its own, knowing that ICE was well funded in the big beautiful bill. Wouldn't that solve this right now? We asked a member of the Democratic leadership, chair of the Democratic caucus in the House, Pete Aguilar. Here's what he said.
ICE and CBP and the Secretary's office, we have huge concerns about their leadership, about their direction, and about their continuous terrorizing of our communities. And that's something that we should continue to have disagreements about and work through. And if our Republican colleagues meet with us about that, then that's something we can talk about. But that doesn't mean that we should have these other entities within the government lapse in funding. Rosa DeLauro put out a bill that would do just that. I haven't heard anything from our Republican colleagues about it.
Also, let's ask one of his Republican colleagues. Republican Congressman Mike Flood of Nebraska is here with us in our Washington, D.C. studio on Bloomberg TV and radio. Congressman, good to see you as always. When we consider this notion, and obviously it probably is too late for today as you've taken your last votes before recess, could this be the solution upon your return?
Well, for the record, if they pass something, I'm still Washington. I should be there. I could be the first vote for that. Because I knew I was coming down here. But hey, we've already done this once at the House. We've passed all 12 bills. We funded DHS. The one big beautiful bill funded DHS. That's the big fallacy here, is that Democrats have sold their base on the fact that they are holding the line on ICE. ICE is funded until 2029. What's not funded when this goes down is TSA, Coast Guard, the folks that work at the Federal Emergency Management Agency. That's why you see Ranking Member Rosa DeLauro doing some fancy footwork to kind of carve it out and put it somewhere else. Listen, if we're up to them, there would be very limited, if any, immigration enforcement at all. So let's not think that this is a play that is rooted in any kind of real strategy. It's just to show their base, hey, we don't support what ICE is doing.
So here we go again. I guess this will be about 12:01 a.m. Saturday. I guess the question is for how long? TSA will start missing paychecks, I believe, the beginning of March. Is that kind of your expectation? That's the pressure point that ends the standoff?
I think it usually does. Sadly, I think this could go for a while.
Yeah.
The Democrats, their base wants them to be very tough, very out there. You see Gavin Newsom using the F-bomb, when he's challenging another state's governor. That's the attitude over there. And that's what we see in our communities. The Democrats, their base, they are very invested in protesting. I fear this could go for a while. It's not going to impede or impair ICE enforcement. It's really just going to hurt the TSA agents, the FEMA folks, and Coast Guard.
When we consider ICE enforcement, though, and the announcement we got from the border czar Tom Homan that those operations, Houston, Operation Metro Surge in Minnesota, are going to be now unwound, do you see that pullback as the right move at the moment where things got incredibly hot?
I do, and I think Tom Homan and Governor Walz deserve a lot of credit for that. In my opinion, here's what happened. The state and the municipal law enforcement, under the direction of the governor and the mayor, decided to be more cooperative with the federal enforcement under the direction of, in this case, Tom Homan. Tom Homan said a week before that second tragedy, he said, if you just let us into your jails, into the county jails, into the state prisons, we can be out of here and we can do what we need to do and move on. You go into a secure detention facility, you find somebody here who's been here illegally, you take them into custody, you run through the administrative process. That's what's happening in states across the country. That's why there's no violence in the streets in the city of Lincoln or Omaha, Nebraska, because our city and state police, they understand that they're one team for law enforcement. It doesn't mean that they're out enforcing the laws, but they are providing scene security to make sure if a warrant is...
Okay, Mondo, I'm not sure which one you want because this has been on the screen for a while. Starting to turn back up.
Obviously, President Trump and his EPA chief, Lee Zeldin, are making their announcement on the greenhouse gases right now. If they come to take questions, we'll put an ear on that, and I'm loath to interrupt this conversation because we've been looking forward to it. I want to ask you about tariffs and this vote that we saw yesterday. 6, I believe, Republicans voted with Democrats to check the president on tariffs in Canada. Now that this threshold has come down, Democrats are promising a series of votes on different countries. What's going to happen, if anything, to the tariff regime? Is this just a matter of putting Republicans on the record?
I think this is not a long...
Heads flow, turning up.
We're going to hear from the Supreme Court at some point in the first...
Okay, this is non-zero day. This is like further out expiration. Notice the changes from this morning and positive gamma overhead, the purple. Notice the changes throughout the day as we move lower and drop down through these levels. Okay, now that we're starting to turn. Okay, there's some selling going on down here at 6,800 or so. So. What is Robinhood starting to turn now? Robinhood. I'm going to try this again. Robinhood. Okay, where are we? 71. Okay, Robinhood. All right, so let's see what the March ones go for. Robinhood. Yeah, I'm gonna Yeah, I'm not going to do anything with Robinhood right now. If the markets roll over and drop tomorrow, it could take everything with it. So I'm going to pass on Robinhood for now. I have calls out in July, looking for that to improve at some point. Okay, defensive stocks doing well. Keurig, Dr. Pepper, March, Walmart, June. Constellation Energy. That's June as well. Constellation. Okay. Microsoft is trying to get back above the 20 MA here. Okay, Microsoft. Nice rally off the low. Microsoft. Microsoft. It's been tedious. Been tedious.
And specifically areas in which you're focused, not just with your CEO and Financial Services Committee, but on the Housing and Insurance Subcommittee as well. Housing, for example, we saw a big bipartisan vote on the 21st century.
Yeah, that's where we bound. This is where we got rejected before. Okay, S&P looks the futures are looking a little bit better here. Okay. So okay, right there is where we failed last time. Trace hedge flows rising. All right, looks pretty good. Starting to turn back up.
Could simultaneously raid people's nest egg and become another affordability problem. Well, there's certainly to be said that most people's number one asset is their home. Yeah. You know, I don't have any interest in seeing that go down. But when you have a 5 million unit shortage, one of the great things that we did with this bill this week is we basically said manufactured home builders, you do not have to put a chassis in your house. These are stick-built homes that end up getting put on a foundation. The chassis does nothing and costs another $25,000.
Watching that hedge flow. Got a little bit of positive gamma right here at 68.85. We're at 68.71.
That's not affordable to a family of two, no matter the overtime they're working. Really interesting. Real conversation, Congressman Mike Flood, Republican from Nebraska Financial Services Committee. This is right down the Bloomberg lane, and we appreciate your insights on all these issues. Don't be a stranger. We'll be tracking this vote, of course, Kaylee and I, when it comes to the Department of Homeland Security. We'll have much more on this on the late edition of Balance of Power that starts at 5 p.m. Eastern, alongside Kaylee Lyons in Washington. I'm Joe Matthew. Bloomberg Business Week.
Okay, getting rejected again. Microsoft starting to cruise now. Microsoft.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making. That's what we cover each week on our podcast, The Deal. I'm Alex Rodriguez, former baseball player turned business executive. And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams, I want to be an owner one day, Billie Jean King, learn the business, Paul Rabel, don't chase trends, get ahead of them, and so many more. Oh, now this guy's on that one. Now I'm getting the lay of the land.
Valets can be a big test for a young homeowner trying to get their parents.
There's an overflow lot somewhere in the vicinity. The garage is full. They go to the LSL. He said if the garage is full, they go to the overflow. I heard about it right here. Just stand quiet. I bet you guys have driven some great cars.
Gristle can't protect you from becoming your parents, but we can protect your home and auto when you bundle with us.
If you might have brought the wrong car, we had the red convertible.
Okay, we only got about 20 stocks advancing.
Over 300 booths, more home and garden exhibits than ever. There's a specialty market, silent auction event.
We're definitely starting to see some cracks.
Informative workshops, culinary demos, and food tasting, plus building industry pros, landscaping advice, pool, sunroof, kitchen, the bath. Wow! February 20th through the 22nd at the Myrtle Beach Convention Center, sponsored by the Ori Georgetown Home Builders Association.
New bathroom is as easy as easy. Come visit our big, beautiful showroom to see all the culture marble options to create the bathroom you'll love for years to come. Stunning and durable, your new shower or tub from Easton is custom made and installed per your specifications, using culture marble from top to bottom, no fiberglass or acrylic. We manufacture what we install, so our prices are the best in town. For value and quality, come see why getting a new culture marble bathroom can be easy as Easton.
Yeah, 6 tests of the 50-day. And just as easily could take out the highs.
Agaves from 5 lands, each with its own terroir, come together in one extraordinary expression, crafted in harmony, united in spirit. Vigenta Tequila.
Ale, not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Institutions. The only thing institutions are buying right now are defensive for the most part. All right, Microsoft with a nice reversal. Okay, we need to see Apple turn up. Apple would help. Microsoft off the low. Microsoft off the low. Okay, that'd be nice. Microsoft. Love to see Microsoft up here at the high. Microsoft.
Matt Miller makes fun of me. He's like, Master, you never know what day it is. And I'm just like, I think it's just so much coming at us.
You know what? You know what it is? It's Charles Friday the 13th. You're gonna say the thing. What would say on Friday?
Decaphobia.
And
Yeah.
there we go.
Okay, so it's Friday the 13th Eve, so that means it's February 12th. Thank you, Mr. Steinbeck. All is not really okay with apparently Nasser, and all is not okay with Wall Street. First concerns about tech profits, worrying investors. You've got stocks, Bitcoin, silver, bond yields all moving lower on this Thursday. I gotta say, it's an interesting tone. It's not like everybody's heading for the exits, but really, that's a lot of our lows in the session.
But look at yours. You're down 5% right now.
Yeah.
That's really weighing on the market. That's the worst day for Apple going back to April 4th of
on the markets. But ahead this hour, we're going to get the latest on today's selling and on that AI scare trade. We're going to do that with Raphael Tuin. He's head of capital market strategies at TKO Capital. See what he has to say about the trade, the churn, some of the, are they just narratives or are we seeing a pivotal moment?
Microsoft continues looking pretty good. Back up to today's high.
right now speaking at the White House, making some announcements about the EPA, taking questions too. We'll keep our eye on that, bringing any headlines as we do get them. What a week it's been, Carol, in Washington. Key members of the Trump administration going before Congress. The White House dials it back on Minneapolis. Trade agreements are once again up for debate. We saw some Republican defections late yesterday in the House.
Exactly. Some highlights and lowlights, if you will.
Defensive stocks. I'm sure I've been pretty clear. That's what I'm seeing moving today. Defensive names and the XLP, consumer staples, and utilities group. Utilities make sense if the Fed does anything or rates do get cut a little bit. Fixed income investors will flock to XLU. Plus, you got defensive. You're very defensive there. Okay, Microsoft, a little profit taking. Microsoft. Walmart, another one. Walmart, Costco, Walmart, Costco. Okay, turning back up. Costco. All right, we're turning back down again. Okay, this is I know it's frustrating, but you know this is the market we're dealing with right now. Below 6,900, we are defensive. All right, so Russia memo this morning. A Russia memo sees a return to the dollar system to pitch in a pitch to Trump. That was earlier this morning.
So much. Well, the AI wrecking ball continues to upend stock trading. We just heard from Nora
on the trade today. Investors worried about the impact, everything from SaaS companies, financial advice, and wealth managers. That's a trade playing out again today. Real estate service firms, and even another one today in terms of the AI scare, logistics stocks, Tim. And then, of course, we had Cisco Systems. Let's not forget. Shares plunging today as its disappointing outlook for profit margins underscored higher memory chip prices are taking a toll. Yeah. Add it all up, and here we are.
Yeah, this is starting to be a theme. We got Raphael Tune with the Set of Capital Market Strategies at TKO Capital.
It's been a drag.
$60 billion in assets under management.
It's been a drag. Last few days. I mean, it's just so choppy. If you look at the markets, you should be able to sympathize with what you're dealing with, okay? You basically have upper half and a lower half. Oops, upper half and a lower half. Okay, so you've got the upper half. Okay, that's more or less this situation. Okay, let me just take this down a notch. Okay, so we're in the upper half. Up until today, we're in the upper half. And the lower half. So we're back into the lower half. Okay, so that's what we're dealing with.
Free cash flow generation, high visibility, identified sources of growth, barriers to entry, sometimes have collapsed. So yes, indeed, some rotation. But
yeah, so that's what we look like right now. That's what we look like. All right, so much for that 4-day range, right? We just took that out today. So as soon as I put it on there, we started to move lower. Got to stop doing that. All right, things have changed, so you should make a note of it.
And that's probably a question for investors to ask themselves. If you're buying the theory that 2026 could be the year of the acceleration of AI.
Okay, let me move this over.
The year of innovation, the year of disruptive news coming in and out from those various tech companies.
Okay, we lost this. Okay, 1, 2, 3, 4, 5. Looks like 6 distribution days now.
Interesting time for investors to assess their strategy.
A company like Apple down 5% today, for a couple of reasons. One is the whole market is lower, but also investors are concerned after the company, or the FTC rather, sent a letter to CEO Tim Cook saying the company could be violating the FTC Act that misrepresents Apple News or violates its terms of service. That has investors a little concerned. Is today a buying opportunity for some of these names?
What's interesting here is that I'm not seeing a big shift in terms of the fundamentals. Like the earnings have been strong, the AI story is on, it's been on for quite a few months now. So it's mostly about sentiment, it's mostly about overcrowdedness, it's mostly about rotation, and in many ways it is healthy. Among those large cap tech, though, the question here is a shift in terms of business models. We went from a business model which was capital light, high top line growth, high margin, and capital light kind of business to a capital heavy business with margin compressing. So this deserves most likely some kind of derating in terms of multiple. The question is, have we derated enough? Today, if you were to summarize, you're basically paying S&P multiple to get into many of those Max 7 stocks. Is it enough? One could argue we are probably closer to the bottom for many of those stocks.
Raphael, one thing I want to ask you, and we are watching headlines in terms of President Trump. He is making some comments in the White House. He's talking about Gaza. He's talking about...
All right, so I just marked this up. This should be pretty obvious. I tried to explain this before, but we did change now. All right, so I'll post this just now.
When it comes to the White House, he talks right now he says it will be very traumatic for Iran if they don't make a deal. He said there's just some different things here that are coming across. I'm just curious, what do you take to heart that might impact the investment climate when it comes to President Trump?
All right, so they're going to push this back down. Can't get a break here. Puts our calls, really. We need an immediate bounce.
Tariffs, etc. And now the unknown unknowns, and we might get some more of those in the coming months. So that's a risk factor. That said, we can say that investors have done a pretty good job over the past couple of years, focusing on what matters. And what matters at the end of the day for investors is how the macro is going to react, what are the prospects for interest rates and interest rate cuts from the Fed, for instance, what are the prospects for earnings generation, and making sure that none of that noise from the geopolitics will be affecting this global picture. So far the market has done a pretty good job at trying to...
Okay, let's look at a few other names like, let's see, Archer Daniel Midland, Archer ADM. Basically, the stocks that are in the watch list, okay? There's a lot of stocks in the watch list that should follow through. Okay, Apple, that's the wrong one. That's IBD. I want the watch list. There you go. All the techs. Wow, Apple really pulled back. I didn't realize it was that much. Apple. Boeing, it's okay. PAC, Caterpillars, all right. Campbell's Soup. Chevron. Dicom. Diamondback Energy. Federal Express. Looks okay. FedEx. JP Morgan. Lockheed Martin. MDLZ. MDLZ. Monster Beverages. MNST. Northrop Grumman. Pitney Bowes pulling back. Most of the ones that are higher are related to defensive. Pam Bondi just slammed the congressperson. I don't know why you're laughing. You're making millions on the stock market, which is true. They're back and forth. They're so funny, politicians. All right, Microsoft trying to continue higher, getting a little rejection here. Now S&P's turning back up. So there you go. Walmart. Okay, what is Tyson Foods looking like? TSN, Tyson Foods. No, that pulled back. Pilgrims. Was it Pilgrims Pride, PPD? Pilgrims. What is Pilgrims Pride? Pilgrims Pride, PPC. PPC, that pulled back. All right, let's look at a few more defensive stocks, utilities. XLP, XLU.
Jeffrey Epstein story. The irony being that the president will be ran for office this call to release these files, knowing full well that he would be mentioning them at length, given his prior relationship with Jeffrey Epstein. And so this is a crisis of their own creation, and they're really trying to dig themselves out of it now.
Does it weaken the president's stance among Republicans? I gotta bring it up, Jordan, considering what
Oh God, man, it really ticks me off when they can't stay on financials. They gotta get into the politics, especially Bloomberg. They're the worst. They are the worst. CNBC's follows with them, and then Yahoo Finance, Schwab. Schwab doesn't do it as much. They're mostly, I got to say, Schwab is probably one of the better. They tend to repeat stuff over and over and over like I do, but they beat it into your head. But Schwab is pretty good. They're mostly financial. They talk about trades. They talk about taking credit spreads and this and that. All kinds of different trades. Coaching you through ideas. You know, they do a good job, I think. Just some of the things pet peeves, I guess, get on my nerves. But yeah, Schwab is probably the better. And you can get the app, by the way. You can get the Schwab app free. So you can listen to it during the trading day. Okay, Walmart looking really sweet here. All right, I'm getting close to my 135, so I might have to do something pretty soon. And notice the Bollinger Bands are opening up. So what does that mean, Benny? When you have calls, especially call spreads, okay, there's only so much you can make. It's defined by, okay, if you take a call spread, let me just show you here. Okay, I take a call spread. I buy a call lower. I sell a put. I sell a call higher. Okay, so I'm taking the 130, right here, 135. All right, so that was what, Tuesday? Okay, so I'm long 130 and I'm short 135. So what does that mean? It makes this trade cheaper. So rather than spending $7.50 or $10 for calls, I can buy a $10 call, sell a $7 call, and get this trade for $3 and still get leverage up to 135. But my max profit is at 135. So once I reach 135, the only thing else that can help me is volatility and how much time I have left on the option. So if volatility expands, then I get the move from 130 to 135 plus the volatility. If it goes from 30% to 50% implied volatility, that 20% means dollars to me. So I like to take spreads, especially in this market. I don't want to buy 1,000 shares of Walmart. I'll buy 10 calls. If I buy 10 calls, at $10, I'm up, it's $1,000, right? So, yeah, so if I take, I can do it for a third of the price. I can do it for like $3.50. Instead of $10, I could buy a spread for like $3.50 and participate in the upside. The problem is once we get up to 135, you got to be paying attention because that's where you want to take profits off. I'm sorry. Did I say 1,000? I meant $10,000. All right. So $10,000 versus $130,000. Okay, let's see if we can go here. S&P.
MGRT. FSLY. PRAI may resume in less than a minute.
MGRT.
Okay, we got something going here. Futures, maybe something going here.
FSLY. PRAI may rise in 10 seconds. FSLY.
HXHX.
Okay. Okay, let's see.
FSLY.
HXHX.
Walmart.
HXHX. BNAI.
BNAI.
HXHX. BNAI.
MGRT may resume in less than a minute.
Okay. Do. All right, Microsoft stopped below right before it got to the new high for the day. We're right below the PMZ, the pre-market zone, where we started off the day. Microsoft. Okay, futures trying to continue higher. Okay, still got to deal with this level right here. Still dealing with this level. Doesn't look like they're going to let us above it. That's my impression. A lot of people are speculating that we are. Rather than speculating, I'm looking for a better opportunity personally. I would love to see this follow through, but got to get above 6,900. If we can close above 6,900, that would change the complexion of the market altogether. Things don't look that bad. Market internals don't look that bad, like junk bonds, JNK. Okay, actually, junk bonds do look bad. All right, they trailed off. Junk bonds didn't look so bad this morning. Now they're back down to the 50-day. Looked a lot better this morning. Okay, so I take that back. New York Stock Exchange, NYA. Okay, that came back a little bit. So this looks a little bit more tired. I would say we're probably going to see more weakness. I think we're going to probably see more weakness. Okay, NYSE, all the things that were holding us up are no longer holding us up. And we have XLP, consumer staples at highs, which is telling you what institutions are doing. Oh boy. Okay. It's much better. It's more fun for me as a podcaster, if you will, financial podcaster. It's more fun for me when the markets are moving higher because it's a lot easier to deal with because people get emotional, instead of listening, maybe some of the members aren't positioned the way I am, which is more defensive. SPHD, SCHD, took TRBCX. I took 15% off the top. I'm down to 70% invested, 30% cash. I'll continue to do that if TRBCX moves lower. So if you're not listening to this and you're doing your own thing, I don't know what your individual circumstances are. All I can tell you is what I'm doing. Okay, this is telling you, given the fact that this is a midterm election year, it's very possible we could see up to 20%, up to a 20% drawdown. Okay, if you're not positioned for that, if you're still sitting up here with 100% long and no hedges, you're taking a big risk. Why take the risk? Reduce your exposure. That's why I took the Robinhood off this morning. I took it off right after the open because it didn't look like it was going to hold. And then the market started to fail, which made it even worse. So that exacerbated the downside. So it took the put side. I had some put credits. I took those off with a small loss, so basically flat. I was thinking about getting back in, but the markets are not giving me 100% right now. Okay, we keep getting rejected, and we're down here at the low. The likelihood is we're going to see this retested down here. That's the likelihood. Okay. Okay, we're probably going to see this low down here. Oops, I don't want that. We could see this low. Okay, so on the daily, that's the bottom of the range right now. If we lose the bottom of that range, watch out. Walmart, yeah, Walmart's good.
MGRT may resume in less than a minute. DRAI may resume in less than a minute. MGRT may res in 10 seconds.
All right. There's still possibilities that we could pop here. All right. So we're looking for the evidence. We got plenty of time. Okay. We got plenty of time left. But it's got to happen soon. Sooner rather than later. We got an hour and 30 minutes to go. Less than an hour and 30 minutes to go now. Okay. Less than an hour and 30 minutes. Okay. We got to break above this level. We absolutely must get, no exceptions, we need to get back above 6,900.
wanted.
My neighbors are arguing with each other. I'm listening to them. They talking about fertilizer, what to put down right now. I got the office windows open. It's a beautiful day outside, so you got to step away occasionally. I like to run in the morning, gets that endorphins going for the day. I had a senior moment yesterday. What is that chemical that you produce when you run and you get exercise? I'm like, it's not dope. It's not opiate. Oh, right. Endorphins. So I had a senior moment yesterday. All right, futures turning back up. Okay, I'm not getting my expectations up. I'm positioned pretty well. I got some defensive defensive positions in Walmart, etc. Just listening to my neighbors. You guys are so funny. Holly and Rich. Nice people. I'm sure I've already told you many times. This particular, excuse me. At this moment in time, I am not doing normal iron condors. I'm not selling iron condors because of things like what you saw happen with what you call it, Robinhood. Robinhood dropped more than expected. Microsoft dropped more than expected. You get some stocks pop, like Micron popped more than expected. The estimated move, even taking the estimated move and doubling it in those cases wasn't enough. So we took a decent loss on. I took a decent loss. I'm not sure how many people took it, but took a decent loss on Microsoft. And now I know I'm going to make it up, but it's just a matter of short term. It does create some defensive emotions. Just watching this here. So got to get above 6,900. Maybe we get a nice rally into the close. That would be nice. Where is VWAP? Where is my VWAP? Did I lose my VWAP?
High tick alert plus 8.
Okay, high tick alert. High tick alert.
MGRT may res in 10 seconds.
Excuse me. All right, VWAP overhead. Look for a retrace to VWAP. VWAP is at 6,900. Excuse me. VWAP's at 6,900. You're crazy. On dips. All right, buy some defensive names. S&P below the 50-day. 50-day. And gamma flip. All right, so what happens if you're a new member, you don't understand what's going on. Whenever you drop below a risk pivot like this, a risk pivot, it's not a gamma flip, it's a risk pivot. Risk pivot. Gamma flips to bearish. Below 6,900, below. The reason why that happens is because dealers now have to, in order to hedge, they need to sell futures on any dips. That exacerbates, see if I can still spell, exacerbates downside and risk. Gamma flips to bearish below 6,900. Okay, let me show you very definitively. You can visualize it by looking at this. Okay, here's the visual. Okay, negative gamma. Okay, negative gamma. So anytime we get down here, you got to pay attention. Okay, it doesn't last long most of the time, so it's definitely something to pay attention to. Okay. Okay. So if you know what dealers are going to do when we reach a certain point, okay, you can start to get more defensive. Okay, you should already be defensive because we dipped below 6,900 since this morning. So
MGRT may resume in less than a minute.
People scoff at this, you know, but it's a definite line in the sand. The dealers are the ones who sell you those options. So you want to go long on the put side, they have to sell you those puts. If the markets drop, they got to sell futures to hedge. That exacerbates the down move. Then you get this cascade. You get this cascade lower, right? We lose the 50-day. That makes it even worse. Now you got the New York Stock Exchange not working. You've got 3 weeks of selling. Okay, something like TRBCX, you got 3 weeks of selling. 4 weeks, we're below the 10 EMA. 10 EMA got below the 10 EMA. 10 EMA price got below the 10 EMA weekly. And what do we say to you? We started to look at positioning or taking risk off the table. This is why we do it, because we don't want to get caught if this does what it did in April. Okay, was that 20%? That was 20%, right? I believe that was 20% back then. Yeah, I'm pretty sure that was 20%. Yeah, there you go. All right, let's see what that looks like on where we are here. Okay. Not out of the realm of possibilities, right? 175. Okay, why would I want to hold on to this? I always say, you know, even if you miss the first couple of weeks, even if you miss the first week, the second week, the third, even if you miss those weeks, even if you miss them, you didn't get stuck in the entire downtrend. All right. So emotionally, you cut it off. You cut it off right there when we start to lose it. The signs are already starting to pile up. We got to pay attention. Okay. So I've been risk off since this morning, and I've been taking profits off diligently. Mm-hmm. Okay, so let me go look at that. Let's see. S&P. No, I don't want that. S&P 500. If I'm scaring you, that's not my intent. My intent is for you to be prepared. Okay? You got to be prepared. You cannot walk into this not knowing. That's my responsibility. My responsibility is to let you know that there are possibilities. Okay. And, you know, we've been riding this trend higher. Like I said, it's much more fun to trade a bullish market and talk about a bullish market than it is a bearish market. It's people get really upset. They don't understand why they didn't pay attention, why they didn't pull the trigger. I mean, there's all kinds of reasons, right? I've learned a long time ago, don't make excuses. When the same thing happens, get out, right? What do you mean same thing happens, Vinny? When's the last time we dropped below the 10 EMA weekly? And what happened if you saw it the first week and you didn't wait till the second or third week? That was a 20% drawdown. Okay, so I mean, if we bounce back here, I would still suggest taking some off. Microsoft. Yeah, just about the time everybody throws it away. Okay. Sorry. Okay. So the S&P 500, we're just starting to lose the 20 MA. 10 EMA, sorry.
MGRT halted down.
What happened? Did I send that already? Okay. Come on, let's get back up above 6,900. Come on, S&P, you can do it. You can do it. Like Rob Schneider, Waterboy. Okay, we're trying to push through this level. We could get a nice little rally, hopefully. Microsoft turning up. The defensive's doing well today. Let me just take one more look at software and see what software is doing today. IGV. Okay, it's still holding the low. I would be more concerned if I was holding software names like Microsoft. If the S&P was dropping below the 6,900 level today like it is, and I was holding Microsoft at the high. The fact that Microsoft is at the low, already oversold, what do you think is going to happen? I'm thinking, well, obviously I don't know what's going to happen, but what I'm thinking is happening is it's already oversold. People who are getting very freaked out that the markets are moving lower, they're probably going to sell some more. But the institutions are down here picking up shares. So you're selling at the wrong time. Institutions are sitting here scooping up shares. Now, we'd like to see more volume. We just know that there's a lot of puts being sold. Let me just go check that out real quick, actually. Market overview. Tape. Let's see. Microsoft. Is there any Microsoft here? Okay. Coin. All right. A lot of coin. Puts. 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 Are they selling puts? Okay. I don't know. Let's see. Are they selling puts? What are they doing here? Okay. Okay, single stock, Chipotle, Nvidia, puts, Nvidia puts bought to open 56,000 of those. Okay, you see that right there? Nvidia puts bought to open 56,343 puts, the 177.50s. All right, those are just out of the money, about $10. Nvidia puts. Bullish lean in technology. That's interesting. So what I was just telling you about Microsoft and software, you're thinking, I'm not saying you personally, the people in the room, you're thinking the market's going lower. Institutions apparently are thinking technology is a buy down here. Okay, so that's makes sense for Microsoft for me because I want to flip my head around the other way. XLK. Okay, that pulled back some, so we need to see a higher low. So do I buy now? I would say no. I would say let's wait for the S&P. Let's see what happens tomorrow. Do we go lower? Do we lose completely lose the current uptrend? Okay, remember the RSP. Well, that looks a lot uglier than it did this morning, doesn't it? Okay, so S&P equal weight index, S&P equal weight. All right, so we did get some buyers at the low of the day. S&P equal weight. So we need to get back above the 20 MA. Right now, I would say neutral. Okay, I would just draw the S&P equal weight. What I would do is I would see the high, I would see the low, and I see the midpoint. Okay, so that's telling me where do I need to go in order to be more bullish. If we bounce back up at that midpoint, if we even get that far and get rejected, then this green line is going to turn down decisively, and we're going to continue to see a sell-off. But they're saying Brett's Flow Patrol, the options that are positioning are saying that tech is getting bought down here. Okay, so I'd like to see the evidence. I don't want to just go by what I see showing up on a report. I want to see the actual confirmation. I want volume to pick up. What I see is selling volume. That could be, all right, the down movement is amateur or less intelligent traders or investors throwing shares away out of fear. Institutions do the exact opposite most of the time, right? They're looking to buy the dip. And I'd say this is probably setting up. So I need to see volume tomorrow. I need to see more volume. It doesn't have to happen tomorrow. It could be next week. Therefore, I'm in no hurry. The only thing I'm doing is considering taking more TVR BCX instead of 15%, taking 25% off. Okay. Take 25% off. And if it moves further next week, take another 5% off. Maybe I'll be down to 60% invested, 65% invested. Okay. So until this reverses trend, I'm ready to reduce a little risk. Once it starts to reverse, I'll start to put that money back to work again, like we did over here in April. We're not there yet. There's a more of a probability that we're going to continue to move lower. So that's what I'd be focused on. This morning I was thinking, when I was jogging, I was thinking to myself, well, the S&P looks like this, and NYSE is at the highs. Remember I talked about the NYSE? The NYSE is at the highs. Well, guess what? That's our first crack right there. This morning, this looked like Monday, Tuesday, and Wednesday. We had these little candles moving up. We had wicks on the top of them, but we were holding. Same thing happened with the diamonds. Russell shorted the diamonds. Okay, Russell shorted the diamonds, I think on Tuesday, or maybe it was Monday. We hit the high, got a little nervous, but we wind up closing at the low of the day, near the low of the day on Tuesday. Followed through yesterday and today. So is it over with? It's too early to tell. But we're certainly seeing cracks. So whenever I see cracks, that's when I start getting defensive. And what am I buying? I'm buying Walmart. I mean, it's pretty obvious what they're doing. I would say, isn't it obvious what they're doing? Walmart's still going. I couldn't get into it last week, unfortunately, because it got away from me. I was looking for consolidation. We finally got that Tuesday, Wednesday, followed through today. So we did a good job getting into that. I bought Kimberly-Clark, KMB. That's looking good. That's just getting started. Look at the Kirby over here. Look at that massive Kirby. Let me see. Let me go out one more month. Let's go out 2 months. Okay, so you see where the ceiling is over here? That histogram. Okay, let me increase the histogram here. Let's see. Volume by price. Let me go up a notch or two. All right, you see this? See the histogram? Okay, so what I see is potential for this to move into the Kirby, which it already did. Okay, we already moved into the Kirby. Okay, the Kirby is this area where there's very little histogram, and it starts to build up right around here. Starts to build up here, and then another one just above that. So this zone is going to be resistance. Where are we right now? We're at 110. So we could see another 10 points on this. I'm not saying it's going to happen, but when institutions position defensively, that's exactly what I'm anticipating is going to happen. Okay, so this zone over here is called a Kirby. The Kirby is nothing more than a vacuum cleaner. So prices tend to get sucked back up into this area because there's less resistance. You can see there's a big gap. So anyone that was trading Kimberly-Clark on the long side either got stopped out, maybe they're still sitting here, but this big drop in the gap, nobody traded in this area. So there'd be less resistance into the gap. Capiche? All right, so that's Kimberly-Clark. All right, what else am I buying? I'm buying Keurig Dr. Pepper. I think I said that, right? Keurig Dr. Pepper. Okay, I have Keurig Dr. Pepper. That dipped a little bit. Now it's starting to move back up. Procter & Gamble. I have a small position in Procter & Gamble from about a month ago, I guess. Coca-Cola. I meant to take some Coca-Cola. I didn't do it, but Coca-Cola looking good. PepsiCo looking good. Colgate looking good. Clorox looking good. ConAgra, food. People need food. You got to have food. Cal-Maine are chicken eggs, right? Eggs. Cal-Maine not doing that much. Ross stores. Okay. value for less, right? You can buy some Ralph Lauren stuff at here or TJ Maxx. Okay, these are moving back up. Walmart, we talked about. Costco. Okay, I have a position in Costco, small. BJ above the 200-day. So these are all pretty obvious to me. Now, whether or not you're buying any of these, I don't know if that's your style or if you're not into it or you don't like boring names like this, but this is where the money's flowing. Pretty obvious. Is it too late? It's not too late. You got to buy on dips, though. That way you don't get shaken out as soon as you get into it. SPHD, SCHD, it looks like people are starting to reduce their exposure. The way I read this is we've run up since January, the January breakout here. Let's see, do I have SCHD on here? You know what? I have it over here. Okay, dividend ETFs. Okay. So all you have to do is look at this chart list. Okay, all you have to do is look at this chart list over the last month and look at the gains. Look at the gains. All right. SCHD, DIV, SPHD, all of these. Look at the gains over the last month. So I have 50% of my portfolio long term is in these ETFs. Okay. The other things that I have is like TRG, TRGFX, RGAFX, T Rowe Price, TRBCX. Okay. But I'm reducing my exposure here. So I'm leaning towards TRBC. I'm leaning towards defensive names. I'll be adding to Walmart most likely. Okay, just about the time everybody gets fearful, we'll be looking for a bounce. Let's see what the other thing to consider. We're at the highs. I know this is going to send some mixed signals, but look at the bull bear ratio. Okay, that's near the low. Okay, we just came off a low back in 2022. This is when this turned right here. That was our signal to get into TRBCX. That was our initial entry back in late 2022 after the bear market. When this turned up, that told me that bears were capitulating, and that once it started to turn, we could get long. And that was 175% gain. 175% on an ETF in my portfolio, or a fund, I should say. So we just recently turned again. Okay, mid 25. After April, that turned back up. It's still pointing higher, so it's not rolling over completely. S&P is turning back down now. Okay. So selling premium seems to be working here. Selling premium above and below prices. That looks like what they've been doing today. Okay, so they sold some premium down here earlier when we started to bounce. They sold premium. Now it's rolling over again. You can see it here. Let me just zoom in a little bit. Okay, so if you go back a couple hours, you can see the positive gamma wasn't there. Now it comes in, and they were selling some premium down here. Now they're taking it off again. Overhead, same thing this morning. You go back to 9:30 this morning, you can see what was sold right there above 69.45, right here, 69.45. Watch that level. As we started to turn down, they took those positions off. Okay, so they made profits selling premium overhead. Now hedge flows are turning back down. Risky market. Chop is most likely going to be the case. Okay, now they're going to start pulling out Michael Burry. He's only been saying that the markets are going to crash like for the last 3 years. Now Yahoo Finance is going to bring out the Michael Burry card. Wow, Michael Burry has been short. What was the other thing he's short? He was short Palantir. Palantir. He had the 60 puts or something like that. Palantir. What's Palantir doing? STX. Wow. Seagate Technology did pretty good today. Palantir. I know I can kind of get sidetracked on talking things. The bottom line is this: protect your profits, protect your portfolio, buy defensive, reduce your risk. That's it in a nutshell. Below 6,900, no questions asked. We're risk off, which means we take less risk. Structure your trades accordingly. Like, I'm not going to buy 1,000 shares of Walmart. I'll buy call options. And I won't just buy straight call options because of the way the markets are structured right now. They're very susceptible to a pullback. So instead of buying straight calls, I'm going to do a call spread, right? Make my bet cheaper like this. Instead of paying out $10 for an option, I'm going to pay $3. I'm still long. I'm just doing it for less profit. Now you might say, well, you won't make as much money. That's true. However, I won't lose as much either. So it's a two-sided coin, right? Walmart looks good. It looks like we're going to get to 135 before too long. Let me just pull this. Let me save this. Okay. So Walmart, 134.30. So I'm going to have to take this and roll it pretty soon. Actually, I probably should do it today. When's the best time to roll? At the high? Yeah, we're up quite a bit, actually. That position's up over $1,000. So that's good. Walmart. Okay. And that's 2 days. That was yesterday. I believe that's when we bought it. It's either yesterday or Tuesday. But yeah, I have a 135, so I gotta do something here. I gotta roll this. Okay, let me look at the Walmart intraday. Okay. Walmart. I know it probably gets annoying to hear me just constantly talking about the same thing over and over though. This is not a market to just disregard everything I'm telling you, because almost 40 years of experience. This is one of the things that's probably the most important thing. When you lose the 10 EMA on the weekly, pay attention. Okay, 10 EMA weekly, whatever you're trading, whenever you lose that, pay attention, because things have changed. Oh yeah, I want to go here. Okay, so look at Walmart. This is a 60-minute Walmart chart. Walmart, 60-minute. Okay, so we're a bit extended. So when do I want to? I could take profits right here and just look for a dip tomorrow to buy. Although I don't think we're going to get a pullback. That's the only problem with Walmart. Doesn't look like we're going to get a pullback. People are jumping into Walmart. The volume picking up. It's not huge, but if this wasn't for this big spike, this would be a little bit more obvious. Let me go to 1 month real quick. Walmart. It doesn't look that much different. Okay, that's fine. All right, so buy defensive, reduce risk. If you have a day job and you have a 401k, maybe take 10% off. Let's say you've got 100,000 in TRBCX, or you have 100,000 in SPHD. Well, SPHD I'm not less concerned with, because that's holding at the highs. But if you have something like TRBCX or RGA FX, or there's Vanguard funds out there that are similar, that's the blue chip growth. Okay, growth meaning tech stocks. Maybe reduce your risk. Take 10% off. So you have 90% left of whatever you had in there. If you had 100,000, maybe you take 10,000 off. Now, I'm not a FINRA registered advisor. I'm just telling you what I'm doing. To me, it just makes ultimate sense. Yes, I'm very defensive right now. Yes, I'm taking less risk. but I am taking some. It's just in the right sectors. And to me, right sectors are XLP. If that's not obvious, I don't know what else to tell you. That's bullish. That's bullish. Look at the volume. That's institutions. And they've been doing this since January. If a position starts to move against you, like the put credits that I sold on Robinhood yesterday, that starts to move against you, you take it off. Okay. It didn't do what I thought it was going to do. Yesterday during the day, Robinhood did move up intraday, but this morning it got sold pretty quick. So I took that off flat. I lost about $10 per contract or whatever it was. Again, I hope I'm not scaring people, but I do want you to be aware of what's going on. XLP, XAU, this is definitive of defensive positioning. Whenever you see these things take off, you know what institutions are doing. Without a doubt, you know what they're doing. XLV, another one. XLV is starting to move. Okay. Energy too, to a certain extent. Energy to a certain extent also. But that's already ran. That's already run up. So maybe you take a little bit off of this. If you had $10,000 invested here, maybe you take, I don't know, maybe you take half off. Maybe you take 2,000 off instead, 2,000 to 3,000 off. And you remain long because it's probably going to base up here. Depends on your time frame. S&P 500 though, below the 50-day. It pains me this time. Whenever we start to see pullbacks, it pains me because it's not any fun podcasting when the markets are moving lower. Because I know a lot of people are uncomfortable with taking shorts or don't know what they're doing, wind up taking on too much risk. I will say this: if we do bounce, I'm looking to buy some puts out in December after the election. Probably do some spiders or something like that. Let me look at spiders. I'm looking at SPY. I'll probably do a vertical here as well. 650, maybe 645, 650, something like that. 200-day. If we can't recover the 50-day, let's see what a 20% correction looks like. Again, I'm not saying this is what's going to happen, but 20% correction. Oops, that's not what I want. I want this. 20%. Okay. What is that? That's only 7%. Can you imagine a 20% correction? Midterms? I don't want to take the chance. I'm just going to take my cash. I'm going to put it aside. And I'm going to handcuff myself. Just kidding. Not going to make any decisions here. Okay. Okay, we're dropping off here, S&P. That sucks. I wouldn't be surprised to see a bounce pretty soon, but you definitely need to have some cash on the side when we're ready to buy. Looking for a next leg. If we do bounce back up in the top of this range, the thing you got to realize is that we're still in a range. Okay, so a move to the 200-day is it's less than 8%, less than 10%. Okay. Okay. Oh, I don't like this. I don't like it. I don't like podcasting when it's negative, really negative, and could turn over more. 6 distribution days. This is no fun. If I wasn't podcasting, I'd just walk away from the market right now. I have no need to go. I have no need to trade every single day. That's just not my thing. I don't need to trade every day. Think about it. We only got about 1% to go. We hit 3% off the highs. I mean, look how quickly this has moved back and forth, back and forth. Okay, we'd be down for 2 or 3 days, a week at the most. It bounced for a week and a half, back down for a week and a half, back up for a week and a half, just bouncing back and forth. So whenever that starts to happen, just take some profits, accumulate some cash. Once we establish a trend again, which won't happen until, well, on the bullish side, won't happen until we get above 7,000. So that's out of the question right now. So if the markets can't make it through the high, then I want to take profits. I want to reduce my risk. I want to get into defensive names. All right, there goes the S&P. Dropping off some more. Back down to the low of the day. What a drag it is getting sold. Da 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 da. Okay, I got to take a 2-minute break. I'll be right back.
MGRT may resume in less than a minute.
I think in terms of narratives, and you and I were just talking, it happened to be talking about colleges before we went live, right? And I kind of think about the NASDAQ 100 like a very elite college. We're right at selection time for a lot of college-age kids. And getting into a Brown or an MIT or a Caltech is kind of an honor. And I would argue that the NASDAQ 100 has become kind of that elite economic fitness test, and that it's something companies strive for, and it's something that companies consider changing their listing, like Walmart, like Palantir a year ago, in order to potentially be a part of that group of stocks.
All right, so let's continue this old economy conversation and some of the rotation that we're seeing, because obviously very important. We've seen a lot of this movement into these cyclicals, the consumer names, the industrials, moving away from some of the big tech names, particularly right now. You know, as you think about this rotation under the surface and the leadership changes that we're seeing, what are some of the observations that you're making from your lens?
Sure. So I would look back at the past 3 months. So I believe the NASDAQ 100 topped right around Halloween, October 27th. And over that time window, the NASDAQ 100 is down roughly 4%, or like 5% off all-time highs. The Russell 2000 is up in the ballpark of 8%. That is a significant spread when you look back through time. But then if you stretch it out, and maybe I focus too much on perspective, but I think it's helpful, particularly on days like this and stretches like this. You stretch that 3 months out to 3 years, and the NASDAQ 100 is up like 110%. S&Ps are up 75%. The Russell's up 45%. That's a different picture. Now, this visual, I think, is fairly telling as well. We're going back a decade, and we're looking at trailing one-year returns for the NASDAQ 100 relative to the S&P 500. Now, that red line indicates the point below which the NASDAQ 100 trailing returns would have been worse than the S&Ps. Above that red line, it's outperforming. For the vast majority of this time, you see that outperformance on display, and you see it in spades during a couple periods, right? Kind of in the early part of the pandemic, and then after the 2022 sell-off. You could argue that we're nearing an inflection point or an interesting point on this chart. I, as I mentioned regularly, tend to look at things through the index options lens. And when I look at that lens, one of the sort of things that I track is the 1 month 25 delta puts for relative indices. And that spread in volatility terms between the NASDAQ 100 and the S&Ps, again, 25 delta 1 month puts, is out to an unusual level. So like if I was thinking about positioning around that, looking for that to potentially narrow if this market settles down. Big picture, the NASDAQ 100 has been bouncing between 25,000, 26,000. We're a little bit below that today.
Okay. MACD's crossed. Can we get a flush here? That'll scare the crap out of everybody. A flush would definitely scare the crap out of everyone.
Quickly run through what happened so everybody's on the same page, and then what we're seeing in very early indications. So January 16th, the SEC approved this NASDAQ filing for expanding the weekly program to a handful of securities. January 26th, those options were first listed, and last week was the first Monday, Wednesday, where we saw new expiries. 9 names, mega cap, generally technology names, and IBID was above the threshold for market cap for an ETF. Now, also important to understand that industry volume clusters throughout time. So, and it clusters typically around index products. If you look at things like NDX and the Qs, SPX and SPY, and then throw in IWM, you're talking about more than 20 million options on any given day. That's like a third of the overall market. Now, you move beyond that, and these options were introduced on the next most active products. We have examples of how this has worked with the index products and with a handful of commodity-based products for years now. This has been, I made this point a couple of weeks ago with you, a demand-driven expansion. Now, long-winded intro. If we have a visual here, I think it'll explain better than my rambling. Now, on the y-axis, that vertical one, you're looking at the percent of industry volume. And on the x-axis, you're looking at a countdown of days till expiration, with 15 being on the left-hand side and 0 on the right-hand side. So we looked at 3 weeks of data. So
yeah, Josh, and as you just mentioned, Wall Street strategists are basically taking note of the fact that Bitcoin has been diverging from gold, and that Bitcoin is no longer serving as a type of digital gold. At least Deutsche Bank analysts recently noted that. And you also have had Sean Farrell of Fundstrat basically saying that investors have been growing frustrated at the fact that you have seen this sort of divergence between gold and Bitcoin. If you just take a look at Bitcoin, it's down now more than 2.5% with the overall market that's slower, really. But you're looking at Bitcoin at around 65.5. And if you look at year to date for Bitcoin, it's down more than 20% year to date. So, and if you look at gold, I'm just going to pull up the commodities chart so you can see gold, despite today gold being down 3% with the overall market, you're still looking at gold that is year to date up more than 14%. And that, if you couple that with the gains that you saw last year for gold, up 65%, and then meanwhile Bitcoin just lost its 4th month of losses. So you do see this divergence in this idea that perhaps it is not digital gold, or at least it's not been acting like digital gold over the last several months, Josh.
And that's what we got you. About gold, under some pressure today in today's trade. And what do you see there?
Yeah, look, strategists are saying that you could be seeing some selling of assets that have done well so far. I mean, we had volatility in gold at the end of January, beginning of this month, but nonetheless, it is still one of these assets that is up year to date. So perhaps with this overall market, there may be some margin calls, and so you may have traders that are selling some of their assets that have done better. You also had a report from Bloomberg talking about the Kremlin that had sent a memo or that has a memo about a possible embracing of the U.S. dollar as part of a possible agreement between Washington and Moscow. And so that's like the dollar up a bit, and so that therefore would put pressure on commodities like gold, for example, especially when you talk about so much about gold being a debasement trade and other countries trying to get away from the U.S. dollar and going into gold. So that may be part of it, but overall, you are seeing the market overall that is lower today.
All right, Nez, thank you. Coming up, crypto industry investor weighs in on the recent sell-off in Bitcoin. That's next on Podcat.
Woke up feeling like trash. Left my headphones at home. And guards are lining up to use my equipment. Needless to say, the vibes are fucked. I'm still gonna hit that PR though.
All right, I took a little bit off of SPHD and SCHD. All right. SP 500, S&P. Okay, S&P 500. Okay, we're at the low of the day again. Man, they're killing premium, that's for sure. Yeah, me too. We're below the 10 EMA weekly. Mm-hmm. Okay, so down to the low again. All right, so that's the low of the day right here. It's been so easy to go to head to the VWAP, but they didn't want to do that. So I can't tell you how many times I've said in the past decades, whether it was with friends or with members since 2014-15 when we started blogging, that once you drop below 10 EMA, you got to pay attention weekly, because we've had this uptrend. We've had this uptrend since 22, since the end of the bear market, and then we had that one pullback in April. Pretty decent pullback in April.
Return to growth in the second half of the year. TripAdvisor shares, they're falling to a 52-week low here, following a sharp profit miss in its fourth quarter. A lot of the weakness coming from the company's Viator segment, which reported EBITDA $6 million short of consensus. TripAdvisor executives emphasized monetization opportunities in its new AI-driven tools, and I was less than enthusiastic on it.
2011.
5 buys, 10 holds, and 4 sells. And finally, shares of Magnum ice cream sinking on the back of the debut earnings report. The
Robin Hood still holding their lows. Yeah, looked good yesterday. It did exactly what we anticipated it would do. It bounced. Robin Hood created the doji, closed near the middle of the range, but today don't need that extra concern. I have calls, got plenty of time for that to play out, but right now, short term, yeah, risk off, risk off. Buy your Walmart. Buy some Walmart. Buy some Keurig Dr Pepper. We got some short covering. Sounds like Keurig Dr Pepper. That looks good. Kimberly Clark, KMB, PepsiCo, Coca-Cola, Colgate, ConAgra, Archer Daniel Midland. All of these at the highs. Ross Stores, Costco. Very obvious what they're doing. And what they're not doing is pretty obvious too. What they're not doing is trading Apple. That's unfortunate. Apple looks so good. Apple looks so good coming into the week. And then we just kind of faltered on Monday, pulled back Tuesday, Wednesday. Looks like we're going to do something Wednesday. They sold that. So we didn't get above that 280 zone. That's Apple. Amazon, okay. Amazon continuing lower. So if you want to sell overhead call credits, I mean, you could probably get something for that. Let's see, 225. What is 225s going for? Let's see. Let me go take a look at this real quick. If I'm going to sell anything, I want to make sure that we're on the right side here. Amazon, let's see. Let's take this off. Let's go to Fangs only. Amazon. Amazon puts are expensive. Anything on the bottom left quadrant, these are all expensive. What's Tesla doing? Tesla retreated. All right, a lot of things we normally use for support are failing. When you look at Tesla, for example, let's look at Tesla. Okay, Tesla lost the 60-minute 20 EMA. Okay, so if it gets back above the 20 EMA, then we'll take another look at it. I have TSLL shares. That's it for now. No options. Time is on our side. Okay, we're going to be down maybe a couple of days. Maybe they buy again tomorrow. I don't know. February is not the best month of the year to be buying. Tends to be a weak month. Okay, let's go take a look at that seasonality. Okay, seasonality. There's February right there. Okay, between April and February, these two are pretty nasty months. Best months of the year, July and November. Let's look at the S&P 500. So you can see S&P 500, February and April are not the best months of the year. Qs, let's see what the Qs. We're dropping off more now. Okay. Kimberly Clark, that's up quite a bit. Kimberly Clark, about $100 per contract. Okay. Rig. What's Rig doing? Rig. Okay, we got about 13 minutes to go. 13 minutes to go. Okay, what's Silver doing? Silver looks like it's going to lose it here. Silver at the low. S&P still moving lower. Silver, okay. Chevron.
With Moomoo, turn data into sharper trading decisions. And with Moomoo AI, spot what matters, predict what's next, and decide with confidence. It's all on one platform, from stocks and ETFs to options and crypto. Trade smart with Moomoo.
The latest economic data points to a resilient U.S. economy, adding twice as many jobs as anticipated in January, as inflation, which is at 9 million, expected to continue to moderate. While things appear to be somewhat stabilizing domestically, our next guest warns that the global economic order is spiraling out of control. Joining me now, we've got Ishwar Prasad, Cornell University professor and author of the new book, The Doom Loop.
Oh, wow. Ishwar Prasad. He wrote the... Oh, I got to listen to this. This guy wrote The Dollar Trap. He's good. He's good.
So, Josh, to tell you the truth, when I got started on this book, I wanted to write a much more cheerful book about how we were moving from a unipolar world in the 1990s when the US was a dominant power in every dimension to one where economic power is much more evenly distributed, with emerging market countries like China and India accounting for much more of global GDP. But as I thought about all the forces that would take us back to a more stable equilibrium with more competition, I realized that many of these forces might actually be working in a direction that they're promoting instability rather than stability. So let's take globalization.
S&P dropping off here, new lows.
Decades ago, it was seen as a positive sum game where free trade would benefit every country, and it would sort of offset the zero-sum game of geopolitics, where one country can gain only at the expense of another. Now even globalization is being seen as a zero-sum game, so it's not offsetting the zero-sum game of geopolitics. So that became the theme of my book, that economics, domestic politics, and geopolitics are stuck in this negative feedback loop where they're sort of bringing out the worst in each other rather than reinforcing each other in a positive direction.
9 minutes to go.
The negative feedback loop, Ishwar, just want to say, it's sort of like, okay, economic instability.
Okay, we're dropping pretty hard here.
Which then makes the economic system more unstable. Is that how to think about it?
That's right. If you think about globalization, on the aggregate level, it worked really well. It brought millions of people out of poverty in countries like China and India.
Okay, we're dropping pretty fast here.
Had great benefits even for the U.S. economy, but these benefits were not very evenly distributed. So this led to a very disaffected.
Wow, can we get to 6,800? That'd be crazy. That'd be crazy. Get down to 6,800.
China, immigrants were causing the problems we see in this country. So that's infecting domestic politics, and that, as we can see in the context of the US-China relationship right now, ends up affecting geopolitics as well. And then the loop starts over again, so that it leads to much more instability.
Is there a way out of the doom loop, Ishwar?
There's nothing at 6,800. Nothing down there.
Very difficult. You know, when I think about all the forces that feed into the doom loop, you know, I think about the forces that could generate stability as being the middle powers that could act as a stabilizing force. It could be technology that could lead to much more resources and therefore bring us all together. It could be the rules of the game that everybody agrees on, but each of these elements is not working very well. So to my mind, George, if we really want to extricate ourselves from the doom loop,
S&P.
it's a combination of things that are not
Right, 6,800 is where, right there. Okay, 6,800.
engaged, citizens.
6,800 is right there.
Citizens of our nations with our short-term interests, but really who see shared prosperity as a way forward. We need better community, business, and economic leaders and national leaders who can help us see beyond our short-term prejudices. But most importantly, Josh, we need institutions, domestic institutions like the rule of law, a free and fearless press, an independent central
6.5.
checks and balances.
About 7 minutes to go. 7 minutes to go. Well, this was no fun. That's a pretty bearish candle. If you got any of that downside, congratulations. I've mostly been playing the opposite, the defensive side. The Walmarts, Kimberly Clark's, Keurig Dr. Pepper's, PepsiCo, Coca-Cola. Those are the ones I've been watching and trading.
I kind of wonder, Ishwar, as you're talking, like if you had President Trump with us right now, Ishwar, I wonder what his response would be. I wonder if he would say, Ishwar, yeah, there's volatility, and we're rocking the boat, and he might say, I was.
Of course, we get down here, and they're going to reverse reverse it now. Okay.
Kind of post-World War II global order, Ishwar, and I think you were kind of hinting at this. The story goes, it was good for some. It was good for elites. It was good for certain foreign countries, but hey, it wasn't good for the American worker, right? It hollowed out middle America, hollowed out American industry, and we had global institutions that were, kind of handcuffing and hamstringing U.S. power and sovereignty. So maybe they come on and I do want this disruption. I want to reshake up the
5 minutes. Got 5 minutes to go.
Of this disruption, this volatility, we're gonna have more leverage. We're gonna have trade agreements that put American industry on firmer footing, right? We're gonna have a stronger domestic economy. That maybe the disruption, Ishwar, it's actually deliberate. It's necessary. There's a strategy there.
That's a hugely important point, George. I think the sense of fairness is really important. When China, became part of the World Trade Organization, the world's markets, including U.S. markets, opened up to China. The notion was that American businesses would be very keen on selling into the Chinese market, using China.
All right, nice little bounce here. Bastards.
Is how economics and domestic politics interact. What we've seen is a very disaffected class of people in the United States in particular who feel that globalization seems to have generated a lot of benefits, but they're not seeing any of those benefits. And it's not just that some people are losing jobs, but they feel that they lose
Walmart.
the opportunity to clamber back up the
Walmart. Okay, so we're just off the highs of the session. Walmart. All right, I'm going to sell a little Walmart. I'm going to look for a little dip tomorrow, maybe. I'd like to get back into Apple, too. Apple. That got sold pretty hard. Apple. Microsoft already bouncing. It is Friday tomorrow, obviously. So Fridays, we don't tend to be really active. And Monday, I believe, is a holiday, right? Monday's a holiday.
Ishwar, let's end here by bringing it all back to investors. Ishwar, they're listening to this, right? What are they to make of this in your new book, Ishwar? How should it kind of impact and influence where and how they commit capital?
Instability, I think, is going to become
16th, February 16th, yeah.
Theme here, but there is still money.
February 16th.
Is not inconsistent with things happening very well at the aggregate level, the US financial markets are doing well. The economy seems to be doing okay. So there is a legitimate question, where is the doom?
New York Stock Exchange and NASDAQ are closed for President's Day, Washington's birthday on February 16th. That's coming up on Monday as a federal holiday. No trading occurs.
So I think even at a time like this, rather than chasing the stocks that seem to be doing very well, I think diversification remains the key. And that is a very broad theme, both in terms of geopolitical relationships, economic relationships. I think diversification is important. And even for retail investors, that core principle, I think, becomes even more important at a time of instability like this.
Ishwar, fascinating conversation. Congrats on the new book. Thank you.
Thank you, Josh.
We're wrapping up today's market domination. Don't go anywhere. We've got you covered with all the.
All right, so that was Ishwar Prasad. Okay. He's got a couple of good books out there. Ishwar Prasad, that was who was just on Yahoo Finance. He's got a new book out. Where is it? Here it is, right here. The Doom Loop. The Doom Loop. Forces meant to stabilize the global economy like globalization have instead created a negative feedback loop for economic inequality. Yeah. And Trump doesn't like it, so. The Doom Loop. Yeah, I've read a couple of these. The Dollar Trap, this is a good one too. Ishwar Prasad. If you want something to read over the weekend, this is really good. You can do the audio as well, the audio tape, Audible. Okay, read that one. Where's the other one? Emerging Markets, I've read that one. The Future of Money, I started to read this one. I haven't finished it. Okay, The Future of Money. So he's written a lot of good things. Ishwar Prasad, very smart dude. That's when people start talking about the U.S. dollar being taken over by other currencies, not going to happen anytime soon. Russia this morning was also talking about leaning towards using the dollar for exchange back to the dollar instead of doing the whole brick thing that they were trying to do with the Saudis and the Middle East and India. They decided, Russia, Putin has said, okay, we'll start trading in dollars. So he's trying to get on Trump's good side. That was this morning. Putin. Okay, we got less than 30 seconds to go. Okay, Russia memo sees return to the dollar system and a pitch made for Trump. Okay. So this is all in the news today. So watch for the dollar to rally a bit. All right, we got 5 seconds to go. 5 seconds. Okay, well, that was a drag. That was a drag. For those of you who weren't already short, that was a drag. I'm sorry that the markets aren't always going up. That's all. All I can do is talk about it and tell you what I'm doing. For the 20th time today, what I am trading are stocks like Walmart, defensive names, Walmart. Kimberly-Clark was changed direction. Okay, that's off the high of the day, but that looks good. Keurig, Dr. Pepper. Okay. Con Agra, Archer Daniel Midland. All of these consumer staple stocks. Pick your favorites. I wouldn't buy them up here at the high, but definitely on the move since January. Even utilities have gotten going recently. Utilities. So look at the utility sector. Healthcare is starting to catch a bid. Healthcare. It kind of faded. All right. Materials were up at the high. So a little profit taking there. So wouldn't be surprised to see a few days. If you got profits in materials and you've been in this since December, maybe you want to, it's December, January, maybe you want to take a little bit off. If you got 100% invested in XLB, maybe you take 10, 15, 20% off. Put it on the side, keep some long, and go from there. Communications, big disappointment. Communications. Energy, hanging out at the highs. Same thing here as with materials. Maybe you would, if you got 10,000 shares or 10,000, if you have 10,000 shares or 100 calls, whatever, maybe you take 10, 15% off. Maybe you take $1,500 to $2,000 off of your, or 2,000 shares off of your 10,000 for XLE. Maybe you reduce your exposure, put some cash aside. We're probably going to bounce in the short term, but what's concerning to me is that the S&P is losing the 10 EMA. It's lost the 50-day. You're right, Corey. But I use the 10 EMA weekly. Okay, not SMA. 10 EMA. Whenever it loses the 10 EMA, it's just that that's what I use. That's what I use. When you lose the 10 EMA, I start to reduce exposure. That's it. That's as simple as that. You can see the last time we dropped below the 10 EMA, we reversed the next week. That's fine too. I don't mind, but I'll be at a smaller scale, right? Smaller size. TRBCX, same thing. This lost the 10 EMA 4 weeks ago, 5 weeks ago. This is the 5th week. Paying attention to what prices are doing at the 10 EMA is going to save you lost profits. Okay, we can move back up. That's okay. You'll do it. You'll still get the same percentage, just on a smaller amount, but you are protecting your profits. We're up since this 2022 low. The TRBCX has hit 175% profit, and we even navigated this. Okay, we missed that first week down below the 10 EMA. We got out the second week into the whole tariff situation, but we missed the following 8 weeks down to the bottom when the president came out and said, "Good time to buy." Okay, we have the what do you call it? Midterm elections this year. Okay, so that's something we need to pay attention to. Okay, midterm elections. Talked about that already today. Just want to reiterate what we're looking at. Let's see. Okay, there you go. There's the midterms. Okay, the wave down before the election was about 10%. It bounced into the election, then it rolled over again for another 10%, for a total of 20% down from the high. This is my concern, okay? Doesn't mean it has to happen between now and the summer, but February is one of the worst months of the year. So you want to be reducing your exposure. Okay, you might not want to do it. I think it makes sense. Maybe you don't need to. Maybe you feel fine. You know, we'll make it through this without a hitch. That's fine. I'm just telling you what I'm doing. Okay, I'd be remiss if I didn't tell you. What else? Breath looked good this morning and then deteriorated during the day. New York Fang components. Okay, that's what that looks like. Not a pretty picture. Look at the weekly time frame. Okay, that's lost to 10 EMA weekly. Now, you could debate that this was a good idea to take off about 8 weeks ago. We hit the highs and started to flatten out, move below the 10 EMA. That would be a good thing to say. Okay, what else? Breath. Let's see. Breath first. Let's look at breath. Okay, breath. All of these turning down. So this could very well turn out to be a washout. I'm expecting to see more weakness tomorrow, and then maybe a bounce back to the 50-day. But between February being one of the worst months of the year to invest or to put new money to work, and the end of the year midterm elections, I don't like the probabilities right now. I think there's more likely we're going to see downside. Okay. So I'm your host, Cousin Vinny, coming to you from theclosingprint.com, trying to help protect your hard-earned cash. Okay. Just giving you the lowdown on what I'm doing so that maybe you can make a decision on your own. Okay. I'm not a FINRA registered advisor. I don't pretend to be, but I've been trading the markets for 38 years, and I know what I'm doing for the most part. Occasionally I get some things wrong. We all do that. Markets don't do everything you want it to do from time to time. Most recent example is Robinhood today took it off. 1 day later, didn't do what I thought it was. So if it doesn't do something, if the stock that you take or the asset that you buy doesn't do what you think it's gonna do that day, the next day, or the day after, take it off. The faster you take it off, the quicker you relieve yourself of that anxiety or risk, right? If it does what you want it to do, it just takes off to the upside, then, that's great. Okay, have a great evening, everyone. Take care. We'll see you tomorrow. Ciao. Chin up.